Good morning, everybody. What's up, Tony? What's up? Yeah, we got a lot to discuss today. A lot of stuff is ahead of us. For those of you that know, we're going into a new quarter soon. The month that starts the new 2040 60-day look back and cast forward for quarterly shift like analysis. It's basically going to be the new one starting tomorrow, right? So we're going to kind of go over that. We have basically our quarterly analysis, our weekly analysis, and our monthly analysis. That's going to all be encapsulated in what we do today, as is generally the case when we have a new month, a new quarter. Right, so yeah. How is everybody? You guys having a good weekend? It's good to see y'all again. Let me know how your guys' week was. Blessed and life-changing. That's what I like to hear. All right, so we're going to do commodity analysis today too. Again, there's a lot of stuff that's ahead of us. It's going to be very, very important to keep in mind. From the rate cuts to a couple other things. But yeah, so Monday we see there's a holiday. This is Labor Day in the United States. And everybody has a day off, including the banks. So when there's a holiday, you guys remember what the protocol is when there's a holiday, what the rules are? Let me know in the chat if you remember what our rules are for holidays. What condition do we anticipate, and how do we behave when there's a holiday? You guys remember? We wait. Tony, is there any way you could be a little more specific? For those that may not know. Okay, yeah, that's the expectation. Resets because it was off. Okay. Well, so aside from the blanket statement saying we wait, what is a specific protocol that we talk about when it comes to holidays? Obviously, holidays aren't here every day, so you know we don't talk about it all the time. Mike said day before, day after. There's no trades. The day of, the day before, and the day after are considered low probability. Right? Doesn't mean there won't be an opportunity, but you go into it expecting that the day before, day of, and day after a holiday is low probability. So as a result of that being the reality, what do we do in low probability conditions? What's our expectation? Like, how are we behaving in terms of risk? We have risk, okay? Yeah, generally that's what I decide to do, right? A lot of you guys are also doing the same thing. it's either that or you just don't take a trade at all. And you just wait, right? Wait for the day before, day of, and day after a holiday. Let it pass. Because if you were smart money, if you think about smart money, they're not in the market if it's a holiday. You think they're obsessing over the chart? They're out enjoying their millions of dollars that they have, right? So institutional sponsorship is not there. So we need institutional sponsorship for meaningful moves to happen on the higher time frame. So if it's not there, there's no like news, or it's a holiday, or a time when if you were rich, you wouldn't be on the chart, then the volatility is probably not going to be very favorable. You know, there's one-off days and, you know, holidays here and there that things do happen. But at the same time, you want to look at something that's repetitive. And the low probability condition, the harder to trade environment, especially if we're in a position like we are right now, with a holiday, a quarterly adjustment, and in anticipation for a rate announcement going into the fourth quarter, you can imagine that smart money is going to wait for certain stuff to take place. Right now is not a time when they're going to put a ton of money in ahead of the things that are brewing, especially with holidays and the rate cut that's coming. All right. But yeah, half risk, max one trade. I'm personally not going to take any trade. You know, we find enough opportunities to know that we don't have to stress ourselves out over times like this. Like I said, this is just a reality of what's in front of us right now. It's not my opinion. It's not, you know, some random statement. It's just like, it's actually what the condition is, you know, and what the expectation will be around those certain conditions, and some of the things that are brewing, like I said, that you have to be aware of and you got to watch out for, okay? And then act accordingly within, okay? So yeah, that is our expectation setting, okay, for this coming week. Some of the things that are ahead of us that we have to pay attention to. Of course, it's a holiday, so day before, day of, day after a holiday is low probability. Tuesday may offer something. We'll see, right? We're not going to go in gunslinging because, you know, like Mike pointed out, you know, like I've been trying to get you guys to think about, we have rules, okay? And we're not just swinging at anything, okay? We're swinging at high probability conditions. And if it's in low probability conditions, we have our process to, you know, navigate that as well. But preferably, especially if you're new, you shouldn't consider trying to engage or looking for what I'm going to tell you to engage. You know, you should be looking at what this condition looks like. How does it feel? How does your bias and narrative play out? Was it easy or hard? You know, where's your model? Did it show or not? You know, and if you did see your model, would you feel comfortable in that trade that you maybe identify? But you have to do this without being in a trade as you're learning. Because otherwise, if you take a trade while you're trying to learn, what are you focused on? You know, you may have started focused on the concept and trying to learn, but you're automatically sucked into the emotional attachment to the money. And so your focus entirely goes to, am I going to get stopped out? Versus, what is price doing? Is there something here for me to learn and gain experience from to be a better trader? Okay, so very important to consider, to think about, especially, again, if you're new. A lot of you guys that are with me right now and are with me regularly are not very, like, overwhelmingly new. Still pretty new, but yeah, just for those of you that may join and watch replay and are really new, keep that in mind. Tony said, the money and not the process. Exactly. That's exactly. You know, so you want to take your learning more serious early on than how much money you can make. You know? Mike said, low probability due to lack of institutional sponsorship causing price action to be unpredictable and making people go on tilt, blowing up accounts only due to lack of knowledge of how the market works. Exactly. It's not because the market is shady that they lose and blow accounts. It's because they don't know how to navigate it and they're not aware. But yeah, Mike, that is, I'm actually going to pin that. So yeah, this is very important. This is why we need to chill, right? This is why you need to look at this in the way that I'm encouraging you guys to look at it. All right. So yeah, hopefully that makes sense. Hopefully, because I just talked about this in detail about how we navigate holidays. Hopefully, if those of you that didn't write this down as a rule, non-negotiable rules, you're gonna have it written down by now. Okay. And so next time you'll have a process. You have a process now for bias and narrative, right? You have a process for certain conditions like holidays. You have risk protocols that we've talked about over the last 8 months. You have targeting, right? What levels are important? Important liquidity pools. Overall, what price does, in terms of like attacking liquidity, creating a rebalancing and imbalance, or some other internal range liquidity or PD array, or it's consolidating, right? So those are the three modes that price flips in and out of when you're looking for bias and narrative. We, like I said, the liquidity mapping idea, right? We have that in the free Discord and all throughout my private group. And again, those of you that have been here with me throughout the year, it's kind of like preaching to the choir, but I definitely want to remind you guys of all the stuff that we have talked about. We've navigated so many different conditions. We've been correct in terms of bias and narrative for literally 8 months now. Today, it's 8 months straight. We've been in line with the marketplace from the huge drop when Trump first became president, triggering in this artificial fear and nonsense. We were able to ride that short off the heels of SMT in the indices. We picked the low of the year, which again, go back and look at the low, go to the yearly chart and see where that's at, and that'll tell you how I was able to call that low. And then we were also able to get in line with price going higher as a result of that drop being manipulation for the yearly power 3. And then ever since then, right, all the way up until today, every single week we have been able to understand what price is going to do. We went into the summer months, right, basically changing, right? We went from one quarter to the next, and we also talked about the conditional changes seasonally, right? We've talked about seasonality in my private group more so, but even here on YouTube, I've talked about COT and how we use it. I've shown the effectiveness of COT, okay? What else? What else do you guys remember? I want to ask you guys, involve you in this, aside from just what I believe we've talked about. But based on you guys' time with me this year, can you tell the chat and whoever hops on the live stream maybe later, tell them what you have learned. What are some things that you feel you have gotten the most value from this year with your time with me being on YouTube and so public? And some of you guys in my private group, right? I know that some of you guys are here right now. You guys can also mention some of the things that maybe you have learned. I want to start this off a little bit differently for today's call. And I definitely want to get some of your guys' feedback, and maybe it'll tell me what you guys have felt is important, but it'll also kind of share with some new students who may hop on and watch the replay, or hop on now or in the near couple minutes to an hour. It'll tell them kind of what you've been able to discover from being here in the WMG trading family on our live calls. Tony said he's learned fundamental principles about the market. If you could be a little more specific, I'd appreciate that, because some students may not fully get the vast depth that statement holds. But yeah, I'd appreciate if you guys could do that. We could spend some time doing this before we go deep. And again, there's NFP, so we got to be cautious this week. Half risk, one trade, nothing crazy. Tuesday is when we're going to be looking at potentially seeing an opportunity. But yeah, if you guys can market maker buy and sell models. Okay, Tony said that we've talked about that, which we absolutely have. I talk about that all the time. Tyler, my little brother, said understanding time price, defining high, low probability conditions, learning about bias and narrative. Yeah, it's absolutely. Absolutely. Yeah, so okay, learning about PD arrays on daily basis. Yeah. Okay, so you guys have been listening, right? And those of you that may be new to the channel, or may have just hopped on, some of my students are mentioning the things that they've learned with their time here this year. And so far you guys have mentioned fundamental principles of the market maker buy and sell models, fundamental analysis, daily technical analysis, market maker buy and sell models, defining high and low probability, time and price, in depth, bias and narrative. We do that this is the day that we focus heavily on bias and narrative. And in my private group, they get more, a little more details, a little more advanced stuff. But Tony, students like Tony, I mean, man, I've lost count of how many funded accounts you have attempted and passed this year. So, and just in the time from you being with me, so it's been fascinating to see the elevation with some of you guys just from the YouTube channel, let alone the private group. PD arrays, and we have also talked about, like I said, the liquidity pools that are important on a daily basis. So there's no guesswork. Price uses specific things on a regular basis, every day, right? So there's a everyday way of identifying a draw on liquidity, and that has to do with our process called liquidity mapping, or what I call liquidity mapping. And it basically just highlights levels that get used on a daily basis. Not all of them get used, but the ones that are in the chart that are close to you, whether it's previous days highs and lows, weeks highs and lows, months highs and lows, session highs and lows, higher time frame PD arrays that are in close proximity. We've talked about how the market operates from stops to inefficiencies, and then stops to stops when it turns. We've talked about SMT. We've used SMT. All this stuff that is being mentioned here, we have used in the chart. I haven't just sat and talked about it, right? They're things that we have actually applied and seen it play out. So you've had it in your hands as a tool that you're using for the first time. Or maybe you've used it before, but now it's been a little bit more refined, so you can actually be more effective with it, and it could be more meaningful, these certain topics. So, with all this being said, the time you guys are spending here is it's not about signals. It's about becoming the signal provider. Okay, it's about independence. It's about me as the mentor trying to get you guys in a position where you could learn on your own. And if you want to stick around and provide value to newer students that hop on, that support the channel, or maybe there's people that you invite and you just want to add value and become more of an asset to the community, which all of you are, it's just a place where you're going to elevate, and if you want to be a good trader and not just be a subservient person begging someone for a signal like most people are, you're in the right place. Again, I have proven for 8 straight months publicly, every week and every single day in my private group for 3.5 years, that what we do here works. The accuracy is in the high, 70 to 90% rate. This last month was a little bit lower of a percentage, right? And it's 76% win rate. Took about 5 losses, or we took 5 losses exactly, which was the most out of all the months, which, was very obvious in my private group, because that's where I do most of my activity, because I'm with them every single day pretty much. But the stuff that's been shown here on YouTube, It's also been very obvious. And mind you, a lot of my private group students hop on these calls, right? They're students that are with me every day. So if something I say is fake or a lie or bullshit, they are going to come out and say it. Okay, so I have to say that obviously to, because the statements that I've been saying recently are pretty, they're pretty, I don't even know how to describe it, but they're pretty intense, right? If someone's coming out here saying, oh, I've been calling bias and narrative for 8 straight months and it's been correct, and we've been hitting an 80% strike rate, I mean, if there's no one there to validate it, or if someone didn't see it and there's no one there that witnessed it, it's hard to believe, because most people say this type of stuff and they're lying. But I've proven it live. I've done it live. I've taken the trades and shown the executions live, right? Or the markers, and mentioned where I get in, where I'm going to get out. I've mentioned when I take losses, so all this stuff has been transparent. So for you guys that are on YouTube, just realize that there's people in the chat every single time we're live that are with me daily, watching these statements I'm saying come to life. And it's not only just me. We have students like Tony who are just on the YouTube channel who are crushing it, okay? Absolutely obliterating funded accounts back to back to back to back, just off YouTube. And, students in my private group, there's a lot of them that are pretty dynamic as well. Like one of my students I always talk about named Harley. He's been trading for a little bit over a year now, been with me for a little bit over a year now, and he has just had amazing success. He's shown it on his Instagram, right? I think he made almost 10,000 last month, and he's not even 21 yet. And that's incredible. So again, it's not just me, right? The statements I'm saying is obviously sometimes intense, but it's because it's the truth. There's no lying or fakery going to happen here. And, if you stick around long enough, you'll see for yourself that there's something here that's truly unique and valuable. And we're ICT purists over here. So the only things that we use and operate within in terms of logic is based on ICT concepts. Okay. So yeah, if you guys are just hopping on and looking at what's in the chat, I had students mention some of the most important things that they feel they've learned this year just by being here, spending time with me, and just spending time with the group, both here on YouTube and in my private community. So yeah, look over some of that stuff and take into consideration some of the things that I've been saying, and guarantee you that when you spend time here, if you're new, in the next 3 to 6 months, you will be shocked at what you learn. Maybe even within a month. It's very obvious that, things are the way I say they are. By the simple fact of me coming on a weekly basis or daily basis in my private group and literally bringing the stuff to life every time that we're on the chart, week to week, day to day, month to month. And by the time this year is over, you're going to see that we've proven quarter to quarter consistency, basically yearly consistency in that regard. Okay. And it's been that way in my private group for the last 3.5 years. And, I've come out much more public on YouTube, so it'll be the same as the years go by with me on YouTube. And I plan on doing this for a pretty long time. Students like Tony and the results that he's gotten based on the things that we've talked about, his own studies and his own, obviously, engagements, his own personal success. Seeing that type of stuff encourages me to continue because it's having an impact. And that's the whole reason I'm even on social media, because I could easily just ride off in the sunset and go not do anything with anybody except my family and, just do it that way. But, we got to pass our blessings forward. At least that's how I feel. And if you succeed, why not reach back and try to lift others up too? So that's kind of like my philosophy. But yeah, so with that stuff being said, I appreciate you guys engaging, letting me know those things, what has been the most powerful stuff and some of the things you've learned. But yeah, hopefully those of you that may have not heard me talk about holidays before, maybe you're new, hopefully you understand the process and the mindset and expectation we have going into this week in terms of the news environment, right? Day before, day of, day after a holiday, we either don't trade, we lower our risk, and only take one one execution, but we in no way push aggressively in this specific span of time, day before, day of, day after a holiday, right? Tony added that learning the power of trading and not looking for signals and handouts. Yeah, it's so important, Tony. And by now, I'm sure you've really come to realize that. You probably knew it before or had heard that before. That it's not only about signals, but hopefully your time here has really amplified that reality, and for all of you guys too. You know what I mean? Like, if you're watching people that are teaching on YouTube, and all you're looking for is a signal, there's nothing wrong with that. If that's all you can do to try to harness the power of trading, go find someone that knows what they're doing that gives signals. There's nothing wrong with that. But if you're trying to be a trader and your goal is to be a full-time trader or a trader that uses trading for an income of any kind, looking for signals is not going to get you there if you're trying to do it yourself. Signals are great to see examples of things, but the example of the pattern that played out doesn't matter. Why is that pattern trustworthy? Okay, what led to that pattern showing up? Why is that something that's high probability or not? Those are things that we talk about here regularly. And those are the things that are important for consistency, right? So yeah. But yeah, with that being said, because NFPs today also, aside from the holiday, so we got a new quarter coming in, we got a holiday, and we got NFP all in the same week. Okay, so clearly the odds are stacked against you if you're going to go in there and gamble. So just keep that in mind. That's why our expectation is what it is. Just by looking at the news environment, aside from us going into the technicals, which we'll do here in a minute. But yeah, so does everything I've talked about in terms of the holidays, the news environment, what our expectations are, just condition wise, does all that make sense so far? So we can move on, and I can know that you guys don't have any questions. But yeah, just give me a 1 in the chat if you feel you're ready for us to move on. What's up, Chawezi? Another one of my good friends here on YouTube, in the YouTube family. Hope you've been well, brother. It's good to see you again. That's what Tyler said. It's good. Okay. How about everybody else? Is everything clear so that we can move on? I'm trying to just fly through everything. Just throw a 1 in the chat. 1. All right, Tony, for sure. All right, so as always, the next stage in our weekly analysis is going to be the bonds and yields. So we've been talking about the bonds and yields here and there, well, every week, right? Because that's just part of the weekly process. It's where we start from news to interest rates to currencies to DXY to today I'm going to add commodities and then the indices lastly. Because we're trying to build the narrative. We're trying to build front-end information so then when we get to the back end, to our main asset of choice, we have a lot of supporting evidence for one thing to happen or another. And that's why these calls are a little bit longer than normal calls. Well, we always spend a good amount of time on everything, but that's why we do what we do. That's why we start from point A all the way to the asset that we're trying to trade. And again, this is a process. It's a repeatable process. And I do it every single week. For those of you that, try to think like, how do I get prepared? And, how do I set myself up for success in a week or a month or a quarter? How can I have a repetitive process that I could trust that makes sense? That isn't ambiguous. That's not random. Well, that's given to you on a silver platter here every single week. And like I said, for the last 8 months, this process on this day, on Sundays, has literally provided proof that it's effective for months on end, quarter by quarter, it's been consistent, you know, and it all starts here, you know, because if you can't get this right, going on a lower time frame is going to be really difficult, because you don't know if you're in a retracement on the higher time frame. You don't know if it's a trustworthy run higher or lower. You don't know if we're stuck in consolidation on the higher time frame. You don't know where any of these critical points of reference are at, and what's in front of you that could be either risky or high probability. You don't know these things unless you understand the higher time frame. At least, you know, you don't know those things when you're on the lower time frame, disregarding the higher time frame and some of these other fundamental factors like seasonality and you know, COT, which we're going to talk about a little bit today. Right, so yeah, again, I just mentioned that for some of you guys that may be new. I know I get a lot of new people popping in there, or in and out, so you know, I always try to make sure that I keep you guys in the loop. But yeah, so again, we went from the news now to the bond yields. This influences what the DXY is going to do. It has a heavy impact for what the DXY is going to do. Recently, though, we've been kind of stuck in a range. The anticipation and turmoil and chaos surrounding the interest rates has obviously been a factor in this not really looking to go anywhere dramatically. It's just been sideways since basically the start of the year. It started off with a decline and then kind of fizzled out. You go from this high to that low. Okay, this is a good observation here. This low to the high. Let me pull this up. A freaking thing. There it is. So my webcam is... Oh, I can move this thing up. Yeah, my webcam was in the way. Sorry about that. But yeah, so looking at this here, actually remove that SMT. It's a little bit... it's still relevant, right? This high to that high. It's still going to be relevant, but we're going to really want to see what happens after the interest rate announcement comes out. So looking from this high to that low, you may be asking why? Why that high to that low? Well, this high took this high, right? And it dropped. And what did it do? It took this low. So swing lows have been taken, buy side and sell sides have been taken. So this becomes your new dealing range, right? That dealing range has an equilibrium. And if, you know, whether price is hanging around that or not determines whether we are in consolidation or a trending environment. Okay, very down and dirty way to identify what kind of condition we're in. Obviously, there's depths that we could take it, but for this specific piece of the analysis, I wanted to show you guys that, you know, from this high to that low within that dealing range, we're at equilibrium. And you see how price has been trading equilibrium, right? It's been trading back and forth between it, holding price. What do I say about equilibrium on the higher time frame? Do you guys remember? If the higher time frame on the asset you're looking at or doing analysis on is bouncing in and out of the range equilibrium, given the current range we're in, what is that telling you about the condition? If you're hanging around a higher time frame equilibrium price point, higher time frame being like the daily, the weekly, monthly, hourly even. So Tyler said low probability. Okay, what about Tony, Jawezi, Mike? How do you guys feel about that? What have you heard me say about what the condition is when price is in and out? Yes, Jawezi, yes, consolidation. Which essentially, you know, kind of goes with what Tyler said. I'm reckless, right? He said low probability. Low probability, consolidation, you know, they kind of go hand in hand. There's ways and models you can use within a consolidation to get more of a higher probability. But overall, it's the umbrella that's over it is low probability when we're hanging around a higher time frame equilibrium. Yeah, it's not ready to really do much in terms of one-sided biased direction. It's still in an overall up delivery, right? It's delivering to the buy side still. Not so much the case when you look at the 10-year and the 5-year, right? It looks like they may be looking to gravitate potentially to the downside, but you see there's somewhat of a crack in correlation here. So, you know, this crack in correlation if you think about the Kraken correlation and then you look at what's ahead of us in the real world, right? Like if you like what's ahead of us in terms of news, announcements, political landscape, right? Like what's ahead of us that we're aware of that could reasonably be the cause of this going sideways and not really knowing what to do. You know, what could be the cause of that? Do you guys remember what we've been talking about? Aside from the equilibrium, what could be causing this to hang around equilibrium? Because there's a cause and effect for everything, especially in the markets, right? What could be the cause of this? What could price be waiting for? Because consolidations are a holding pattern, right? So what would it be holding for? Potentially, like what could make this make sense? Why it's in consolidation? Exactly, for the rate cuts. Exactly, right? So why am I pointing this out? Like why is this even important for me to talk about or bring it up to you? Well, you want to be able to make sense of what price is doing, the behavior at specific times of the year. You know, you want to make sure you're understanding of what's happening in the economy. You want to understand like what could be affecting what and how it can be affecting the asset you're trading. Like for example, the indices, right? Just to show another example of, you know, an important economic announcement that has a heavy impact. When there's a rate cut that takes place at all-time highs for the indices, historically, prices ended up over the next 6 to 12 months, it's ended up being bullish, right? So the anticipation of that can make price do specific things. Like with the indices, we may see them decline, which is something we've been talking about. We may see the indices drop aggressively going into this new quarter, going into this rate cut that's coming, right? But again, it's a similar thing here too with rate cuts, right? It just shows you how important the economic drivers are, some of them, and specifically in this case, the rate announcements and how impactful federal fund rates are, interest rates for a country. It's very important. And for you to be able to understand this puts you just that much more ahead of everybody else that doesn't consider this type of stuff. You know what I mean? So, you know, we're well-rounded traders here. What you witness me do is a well-rounded trader. I understand a lot of different things. I'm not the best trader, but I do okay. All right. And I prove consistency, you know, and the only way I'm able to do that is because I understand how the market works. I understand what affects it. I understand times when I need to pull back and not take a trade. That's a superpower you get by understanding, at least at a basic level, the impact that some news events have on some of the assets you look to engage or even just analyze, right? Aside from just technical analysis like equilibrium and whatever, there's things that cause certain behaviors. So when you understand the cause of it, the why, it makes the technicals and, you know, what's happening more trustworthy. You know, especially if you have a process like, you know, we showcase here every week, to basically get a foundational understanding of what the market's actually doing sentiment-wise and technically, you know, and then of course with fundamentals, it just adds a little more flair to things as well, you know, and all of this fits underneath the umbrella of clarity. You know, you become clear when you understand things more, okay? And in the market, it's very important because in order for you to trust things, you have to have clarity. You know, you can't have one without the other. Otherwise, you're just being a gambler, right? So that's why this stuff is so important. And I hope that, you know, what we've been talking about has been helping you gain clarity and like an ability to be patient, you know, and be satisfied with being patient and understand why you need to be patient, you know, because you need to know when to push, when not to push. And this type of information, the things that we do here on Sundays, is a very, very heavy factor in allowing you to be confident in being patient and knowing when to trade, when not to trade, and then how to trade when the time arises. Right? Mike said, should not 5-year and the 30-year bonds, something is off. Yeah, something is off, right? It's off. It's cracked in correlation. You could see that, the 5 years weaker than the 3, the 10 years the secondary weaker, or more interested in declining between the 3, and the 30-year is the strongest out of them all. Not that there's actual strength and weakness, because that's not a thing. There's only interest to go higher or interest to go lower. It's like an auction. They're offering price at certain levels for their own reasons, economically, based on whatever their valuations are for specific assets and different economic factors and whatnot, right? It could get real complex as far as why price prints the way that it does. And it's all ran on an algorithm, right? So yeah, there's something off, right? And so like I just got done mentioning, Mike, the things that are ahead of us, the economic landscape, politics, wars, economic policy changes, all these different factors create times for certain things to take place, like consolidation, cracks in correlation, SMTs, trending environments. All this stuff is behind what price is doing and whether it's in consolidation or trending. It kind of tells you, again, a little bit further as far as the why, right? It tells you a little bit more information about the why aside from just the technicals, because that has a place in the why as well, But yeah, so hopefully that makes sense. Yeah, things are a little bit off, and we've been talking about the bonds and yields, just overall. But because of the things that have been happening this year, the uncertainty, the tariffs, and all these different things, rate cut announcements, and they're gonna cut, they're not gonna cut, wars, and inflation, and all these different things play a role in why this has been so sideways. Specifically, the rate cuts have been waiting to either decide that they're going to be cut or they're going to stay in place. Back in May, before May, right, the start of the year, we were calling this, right? We called this breaker, for those of you that remember, right? This wick here, I talked about if it stays above that, we'll go higher. I talked about if we go above this high, we'll target these highs up here. Just all you got to do, if you're new and you weren't here for that, to validate what I'm saying and how we were in front of this and called this higher, and we're on the right side with this asset too, you can go back to these times and go listen to the Sunday calls. Go look at the live calls that I did. Okay, you can verify, by doing that, by going and looking at some of the older things. And there's a lot to learn from some of these older videos. There's nothing for you to use in terms of what price is doing tomorrow, obviously, but the lessons that I've been showing and sharing and experiences I've been lending you guys, especially for new, it's going to be very valuable for you to go back and look at that stuff. It's a gold mine. I've navigated all the different conditions. I've called bias and narrative at a high level of accuracy, and it shows you why by these Sunday calls. So even the old ones, for those that may be new, that haven't learned much yet, or you've just spent time with me for a very small amount of time, I encourage you to go look at some of the older videos. They are a bit long, but there's value in the whole call. I'm not just going on rants about things that I don't like in the world. Pretty much all of it has to do with me answering questions, navigating price, narrating price, telling you where it's going to go, then seeing it go there, or doing things on a Friday, on a Sunday, predicting where it's going to go, and then the next week it ends up going there, and you have the details as far as why. Right, so I encourage you guys to not discount the older videos. Would it be reasonable, Fritz says, to expect one possibly to wait for the other to either reach internal or external liquidity before moving on? I mean, that could be, it's very subjective scenario you just painted, Fritz. It just really depends on kind of what price is doing at the moment and what our expectation is. We do, I believe, have SMT at these lows here. Okay, so these lows have SMT, right? So, but we're still in the consolidation, right? And if rate cuts are going to send the indices higher and the DXY potentially lower, that should be supported by the yields looking to favor shorts. Right, so again, that's something that we're going to keep in mind as we wait for this rate cut to take place, and then see the damage that's caused by it. But again, it's kind of iffy in terms of what it should or shouldn't do for the bonds and yields because they're sideways, and there's the anticipation of the rate cut having a heavy impact. So, but that's not something that I would tell you that you're wrong about in thinking in terms of reasonably expecting one to possibly take internal range or external range before moving. Maybe one takes internal range and then one fails to take internal range. Right? These are positively correlated, so we wouldn't really want to see, unless there's going to be like an SMT, but even with the SMT, we wouldn't want to see like the 30-year takeout buy side external range liquidity while the two other yield markets are dropping aggressively. That's showing you that we're probably in a bearish SMT environment. Or if you flip it the other way, it'd be a bullish SMT environment. So we want to see, somewhat correlation. We don't want to see too much of a lack of similarities, right? Because internal range liquidity and external range liquidity are two different things, right? Internal is like inside here. External is generally going to be highs if we're running to the buy side, right? So if you're doing either or, not like together, right? One doing internal range liquidity raid and then the other one doing an external range raid. If you're just doing one or the other at any given time, just waiting for them to fall in line with each other, then I would agree that you could look at it from that perspective. But we at no point really want to see a crack in correlation if we're, say, going to trust these going higher, right? It's going to have to be one or the other, or a failure swing, right? Like one will fail to take the internal range, and then the other one will take the internal range, and then displacement comes as a result, or vice versa with the external, right? This one could take external range here, but then fail in these ones for a bearish SMT, right? That would be a bearish SMT, and this failure to take out internal with one or two taking internal out, then displacing higher is a bullish SMT, right? But we wouldn't want to see them cracked in correlation, like one taking internal range, the other taking external range on that higher time frame. We wouldn't want to see that, and it doesn't commonly happen that way because these are correlated positively. And if something like that happens, the crack in correlation is massive, like FOMC, NFP, or maybe there's an economic policy that messes something up or has a dramatic impact. Those are all reasons that you could see price consolidate and not really do much, or have a crack in correlation, heavy crack in correlation. Right? So Mike said, what's good for indices in regards to the bonds? So the bond market, right? The bond, T-bonds, this market here, T-bond futures, 10-year T-note, 5-year T-note. T-bond and T-note are two interchangeable statements or naming elements, right? They're pretty much, they're the same, right? They're just, I don't know why they name them different. T-note, T-bond, again, they're interchangeable. But this is what impacts the DXY, the indices and the foreign currencies, okay? And then the bond yields, right? That's a very important distinction. This is what impacts what the DXY is going to do. Okay, and this is why we look at these assets and spend so much time on them to get a feel for what they're going to do. Because if you can get what these are doing, you could then take that information on the back end to DXY, the foreign currencies, GU and EU, and the indices. Because these are fundamental drivers. Currencies chase yield, okay, and that the yield for the DXY, that's this, right? So that statement, currencies chase yield, is showing you that this is correlated with the DXY, reverse correlated with assets opposed to the DXY, like EU and GU in the indices, and commodities, right, like gold. So yeah, hopefully that answered your question. Fritz said it makes sense. Yeah, larger time frame still ranging. Yep. Yeah, so again, we're at equilibrium. We're anticipating the rate announcement, and we're stuck in consolidation, right? So we have to just see, an economic driver that's going to drive this out of the consolidation so that we can get a surety as far as whether we're going to continue going higher here or if it's going to just completely melt, which that should be the case if we're going to look for the rate cuts to do what they've done the last 20 rate cuts at all-time highs for the indices, which has led to 6 to 12 months of bullishness as a result of us coming off the all-time highs as a result of the rate cuts. So if that's going to be the same thing that takes place this time, right? If that's going to be what's going to be anticipated, which is what we're anticipating until we see what it does, we should then see as a result this decline and pull DXY lower. In a perfect world, in a symmetrical market environment, that's what should take place. If the rate cuts are in fact going to do what they've done at 100% like strike rate or play out rate, which is going higher for the next 6 to 12 months after a rate cut happens at all-time highs for the indices. All right, so again, if that happens, if that's what's going to happen, this is going to have to drop to support that. And then as a result, we would then see this accelerate to the buy side because the bonds or the T-notes heavily correlate, for the most part, with a positive correlation against the indices and the Euro USD and GBP USD. And this has a negative correlation to the DXY and the yield market, which is this here. All right, so does that make sense? Hopefully that makes sense. Let me know in the chat if it makes sense. And just a reminder for those of you that support the channel and you appreciate what we do here and you get value. If you get value, don't forget to like the video, subscribe to the channel. If you feel that you've been getting value or can continue to get value here in this community, it's much appreciated. It helps me get in front of students like you guys that truly want to learn, that actually have a passion for this and aren't just some signal junkie looking for me to say buy or sell. So yeah, that is much appreciated for those of you that go ahead and do that. And yeah, let me know in the chat if everything makes sense so far. Then we will move on to the DXY. Because the T-bonds, they're going to do the same thing, just the opposite. As you could see, right, if I just quickly flip through it, right, you could see it's basically doing very similar stuff. Looks like it's setting the stage for it to target buy side that absolutely supports that the rate cut. It's kind of telling us the future a little bit, somewhat. If this continues, right, it looks like it's literally setting the stage for this to have been a shift after a stop hunt with an SMT at the lows. Right, SMT. And I think there's, let me see. Yeah, there's SMT here as well. So everything that's happening that we're anticipating, like in terms of the news, in terms of what price is looking like and what we think price could do and what the rate cuts should do, we're now seeing external or extra factors like SMT, respect to the breaker, then SMT at the lows here, right? So bearish indications potentially coming into play and manifesting here in the yields, which drags DXY lower. Bullish signatures potentially forming in the bond market, which again, if this goes higher, that supports bullish indices. We're anticipating that the rate cuts, given the fact that the last 20 rate cuts at all-time highs for the indices have turned bullish, we're expecting bullishness to take place as a result of the rate cuts coming in September, right? So now with that being said, we're looking at price in assets that dictate generally what those assets are going to do, the DXY and the indices, and we're seeing that supported well in advance before the rate cuts come out. Keep in mind, smart money's positioned before news events come out, right? Sometimes they do it after, but they understand what's going to happen before it happens most times. So they're ahead of the curve. Well, it seems as though if this plays out, we were ahead of the curve based on fundamentals, technicals, and what it is that we see in price related to intermarket relationships, with our understanding of how things work just as a whole. So we'll see, obviously, if that happens. I'm assuming that it will. And if it does take place, we're already in position to basically identify what's going to lead to that. Okay? So yeah, hopefully that makes sense. Hopefully you guys can see things starting to overlap a little bit. Doesn't mean that it's 100% going to happen. We're in probability, right? It could take a little while before it decides to unfold. It may look to decline and come sweep people out like the indices look like they're doing before they look to run higher, and fall in line with the correlation. That's always a possibility. But for the most part, this is what I'm going to submit to. I don't know why the eyeball's down there. It failed. That's an old eyeball. Put that eyeball where it belongs. Yeah, so hopefully that makes sense. So moving forward, that's going to be our expectation. It's going to be what we're going to anticipate and see if price can't continue to support it. I can say that if we get above this high, what does that turn this into? There's a couple different answers I'm probably going to get from you guys. So let's see what you guys think. If we get above this high on this, let me do this. If we get above this high here, what does that become based on the knowledge that you guys have learned from this channel? What things are overlapping in here? What's manifesting if we break above that high that could support us going up there? Breaker, BPR, order block, exactly. Overlapping PD arrays on full display, and that evidence as far as why you only really need one PD array. A lot of times things converge and overlap. No, it is. You know how it is? Because it swept this low. So if we were to displace and get above that, that becomes a bullish breaker. But it's also, if you don't like breakers, if you can't see breakers for whatever reason, you could definitely see the order block. And if you can't see the order block or the breaker, just know that this high taking out the buy side, this low taking out this low, and then us displacing above that high creates a balanced price range because sell side and buy side would then have been delivered. So those are different schools of thought you can have for that piece of price action. Yeah, looking left. But again, this is, even if you did look left, we're still within this price action, which is now the current dealing range. Why? Because it took buy side and sell side and then finishes above. That causes this to become your new dealing range, which you would then look to frame opportunities around. And then, of course, targets outside of that would be external range liquidity. Right? We also have this as a potential shift in market structure that has never came back and reached the low. Right? It did leave these lows. So, again, you guys know that I hate buying equal lows or trusting things that are equal lows if we're trying to go higher. But, there's SMT at that area. So that's pretty much the cause of this leaving these lows available. See, that was a market structure shift. What else can you say that is right here? We got a high here, low, break above the high. What else is that? Can you guys tell me in the chat what this is aside from market structure shift? If you're looking at it, similar to this, right? High, low, higher high. You notice how one certain level refused to be broken through. Which level is that? The low of the breaker, the up candle delivery. That's how you know it's a valid breaker, a valid PD array, in this case, to hold price. And just based on what price has been doing, delivering, you could see that it's been supporting that. I'll take that off so keep the chart clean. I don't want to put too much on there. Just know that that's there. And then, of course, we had this fair value gap it was holding, and now we're continuing to push higher. So, again, we have also a monthly fair value gap here, turning to a potential inversion. That inverted fair value gap is also going to turn to what we just talked about with this breaker potentially, order block, and balanced price range. If it trades outside of this monthly fair value gap, gets outside of it once more, this should be treated as a BPR as well. Remember, overlapping fair value gaps, they're balanced price ranges. Most of ICT's PD arrays, they are also balanced price ranges. Well, you could say all of them are. You know, that's why they should hold. You know, so keep that in mind, right? I've only showed you guys a couple, but there's a little gem right there that most people don't know. And yeah, so from this high extreme to the low, we got equilibrium. And you can see what's happening at equilibrium. Sideways movement, like we've been talking about, right? Why? Why is it hanging around? Why is it not displaced? Because there's a rate announcement coming up. You know, just to reiterate some of the more inner reasons why we're seeing certain price action over others. Okay, so in a nutshell, that's kind of my opinion on this and the yields, right? If the rate cuts are going to cut price in the DXY and rally price in the indices and foreign currencies, as they've done the last 20 times when they get cut at all-time highs, we should end up seeing this support that by respecting this and respecting these levels, probably never even getting back up here and then tanking, targeting the sell side liquidity down here. We have a little bit of a fair value gap in here that may get targeted if it does decide to run that direction, which is our assumption, you know, at least until we see what happens with the rate cut. And of course, the anticipation of what that rate cut's going to do, we're anticipating it potentially getting into these levels down here. Right, go to the monthly chart. We do have fair value gap here, 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 right? So we're kind of stuck in between those two. Isn't that interesting? Monthly fair value gap, monthly fair value gap, and it's just stuck this high to that low, equilibrium. You can kind of see what that equilibrium breakdown from this high to that low, what that looks like from monthly to weekly, right? So it kind of makes more sense of it as well. You could also go from this low that took the sell side, this high that took the buy side. You could also map that out, and equilibrium's also somewhere in that area. Okay, you could see the price is just stuck, and this has been caused from the economic moves, political policy moves surrounding the U.S. economy and interest rates that has made this unwilling to give really any displacement. So that's kind of just been the overarching yearly sentiment for the interest rates, you know, or just like the inner news that's been having an impact. Okay, and again, that should change, and if it does change in the way that we're talking about, as it's done the last 20 times, it should positively push this higher, and then this will be our target here, here, and here. Okay. So yeah, hopefully that makes sense. It's clear enough for you guys to understand and walk forward with for the bonds and yields. Kind of cements our opinion, but it is sideways. So again, it's going to take a while for correlation to get in line. It's going to take that news event for institutional sponsorship to come in, and that's going to give us anticipation for the next quarter, what the quarter is going to do, right? Or how it's going to at least begin, right? And because we're going into a new quarter, this analysis and what we've just talked about is even more important than it would be if we were midway through a quarter that's already been in play. We're going into the fourth quarter. So yeah, one thing that I do want to make sure that I point out for all the assets that we're going to be talking about today. So you'll put it right there. So now we'll outline the IPTA data range for quarterly shift analysis and get a feel for what highs previously and lows align with the last 20, 40, and 60 days. If I can, there it is. So go 20. 40. 2040-60. All right, well, we've kind of exhausted a lot of that liquidity based on this, right? So, we'll kind of see. We do got a low here, but that's assuming that it goes lower. I'm not assuming it's going to do that. Unless, of course, it was to break down, then we'd have to consider it. And then in that case, we could see this as the 20-day low here. There is this low, which is a 40-day low. If it was going to be bearish, this is how you would use it to target. This is how you want to use it when we're going higher too, but seems as though price has already kind of somewhat exhausted a lot of that. So we'll just look at the monthly highs and lows as price continues to go higher, if it does decide to go higher. And then we'll also keep tabs on the quarterly highs from the previous quarters, which is up here. This is the previous quarter prior to the one that we're currently in. So this high, and this high is going to be more relevant than the IPTA 2040 60-day look back, considering that we're anticipating price is going to go higher. And again, if it's going to drop, then of course, like I said, we'll be able to use the lows I just pointed out as potential targets. But again, we got to wait and see what the rate announcement's going to do. And so far, we still have SMT at the lows, and it looks like there's a strong argument given historically and just overall what the technical price action looks like for price to want to be supported going higher. So yeah. Let me actually go back to that quarterly chart real quick. So yeah, that is the quarter. Okay. That's the quarterly high. Let me mark that. So yeah, let me see. Small ranges lead to big, yeah, small ranges lead to large ranges. It's ironic that there's been a lot of small ranges, right? And there's going to be a home run style event or a big earth-shattering event that takes place with these interest rates that's been brewing for months, since January, right? This has been talked about in terms of a rate cut taking place since January. So it's had all this time to just build liquidity and stay sideways because of the uncertainty. And now we're going into the time when that's probably going to unfold. So when it moves, because this higher time frame's in a small range, we're due for a large range quarter, right? At least a large range quarter the next quarter. And that may end the year following suit with the Christmas rally that takes place, or fourth quarter rally, which is generally the case in the indices, and the decline potentially in the DXY. Because the lower dollar, the better it is for commerce and trade. I learned that this year. A lower dollar is actually good for trade. It's better for importers or us exporting, right? Which I didn't know that. You guys probably didn't know that either. Most people don't know that. They don't talk about this type of stuff, right? So I had to search for it. What the benefit is economically for a lower value dollar, at least in the financial markets. All right, so hopefully you guys learned something there. Hopefully that's interesting. I know it was pretty interesting to me to figure that out. But like Mike said, there's small ranges that lead to large ranges. So, this should, given the catalyst that we got coming, it should be able to lead to a large range quarter, right? And we'll see. And we'll look for this quarterly high up here. I don't know where the hell my quarterly, oh, there it is. Jeez. Couldn't find that. But yeah, so we've got that quarterly high, so we'll keep tabs on that. And then we got the quarterly low, which is down here too. Okay. All right. So yeah, with that being said, hopefully you guys get the gist of what we're thinking on the interest rate markets. Now moving on to the DXY. DXY has been continuously dropping. It used this breaker. Right, this is also an order block. Mind you, we called the whole run higher and lower. Just go back and look at some of the recorded sessions. You could see that we have been in line with this entire thing since it ran up, hit this monthly fair value gap. Or is it a monthly fair value gap? Yeah, the monthly fair value gap. And as a result, declined, We called this as a market maker sell model. Price returned back up into here. I said that this needs to hold. It probably will unless it breaks through it. These overlapping fair value gaps here were the line in the sand when price was right here to help further support that this was going to be supportive long-term to the downside. And we have just been continuously seeing price hammer the downside and use all retracements as simply just that to continue going lower. We got this large wick in here. Okay, this large wick. We got the breaker, also an order block, and price has been holding that. And this retracement, right, this wick up here, this retracement was simply just to get into the middle portion of this wick, which is right here. But it failed to do so. So what does that tell you? When price is in a downtrend or in an uptrend, and it fails to hit previous wick's midpoint, if we're in a downtrend, what does that tell you? Can you guys let me know in the chat? Just want to see if you guys remember, because very important. These are characteristics of the story price is telling you using the wicks and the importance of them. So yeah, just give me your explanation. I want to hear each of you guys. Yep, every one of those statements that you guys just said are answers. It's absolutely on point. So I know I'm doing something right. It's absolutely a critical indication that price is in line with whatever it's doing at that time. Okay? And then if it's bullish, it's just the same thing but reverse, right? It's just continuing to show that the narrative's in play and it's continuing to push price higher and hold on to the bullishness, right? So yeah, and again, we take it from the monthly chart, we could see that playing out and providing evidence that that's true. You take this delivery, take it to the weekly chart. You see, yeah, it punched up, but all that was on the DXY was just a retracement to the wick that then rejected, which you see here. And then once we rejected on this weekly chart, you could see, what did it do? Every time it traded into the large wicks. The little ones are a bit sketchy sometimes, but the large ones, they generally, if it's going to support the down movement or it's going to support what it's doing overall, whether it's bullish or bearish, the midpoint needs to be respected on large wicks. Large wicks act as gaps. They're treated very similarly to gaps. So just like how a fair value gap, we don't want to see it traded all the way through. We want to see the midpoint respected to show heavy one-sidedness. Same thing with wicks, large wicks that form. The midpoint should be respected or not even traded to continue to support price continuing to go in that direction, in this case bearish. So you see that it came up here, traded into this, but that was the wick here. Respected the 50% of that wick on the monthly, right? Once that wick was formed here, what did it do? Traded up, respected the wick here, couldn't even make it to the midpoint. What does that tell you? Continued bearishness. Still continued. This wick was formed. What happened here? The candle printed up. I think it hit, I think it hit exactly. Oh yeah, I already have it outlined. Yeah, it came right to the wick and then rejected, right? This one kind of overlapped a little bit more than the previous because we're kind of stalling out a little bit ahead of the rate announcement, ahead of the quarter. Mind you, we're going to close the quarter soon, right? So it's capping the quarterly range. Just like how Power 3 does on monthly, weekly, daily, quarterly perspective, quarterly candles, they have the same thing going on. Yearly candles have the same thing going on with Power 3. So it's slowing down towards the end of the quarter. So, you got to keep that in mind. And that'll generally end in either a reversal or a slowdown, resulting in consolidation as we go into a new quarter. That's why it's important to keep tabs on when new quarters start, because there's a process, just like we have for weekly, daily, monthly, like analysis. Quarterly, you do the same thing. Okay, it's all the same. It's fractal. It happens the same way over and over. Just takes more time for certain time frames to unfold, or time parameters to unfold. Right, so yeah, we're just kind of stalled out in here. Looks like we're still going to stay bearish. That's my assumption. We've really fizzled out into consolidation. So what does that tell you? We've been in low probability conditions. Have we been navigating this live in the private group and on YouTube? Yeah. Has there been as many opportunities showing up as there was at the start of the trending environment this year? No, it's kind of died down. But has there been opportunities? Yeah. I've called them out. I've shown executions. We have taken a couple more losses than we have this year entirely, month to month. 5, like I said. But nonetheless, we've still been able to pull out more winners than losers, which again has been shown live. Right, so let me see. Even if 1 or at most 2, the validating PDA rates are violated, will we still consider the current narrative in play? Yeah, so that's a good question. So when it comes to the 3 PDA rule, because it has to break 3 PDA rates entirely to disrespect the narrative on the higher time frame. There's signs that show you earlier, if you drop down lower time frames, it could start to show you evidence that it may result in the 3rd PDA rate on the higher time frame you're looking at getting violated. But it stays valid unless all 3 of them break. Okay, and it could break a couple of them, right? Like this one we watched to anticipate when price got above there. You guys remember, if you go back and listen to what I was saying, I said we have to monitor and see how this is going to behave. Given the fact that the monthly chart looks like it's trading just into the breaker and the wick, this weekly chart is subservient to the monthly chart. So just because the weekly chart breaks through a high, if it's not supported from this higher time frame, that may just be short-lived. And it was, right? It just acted as a wick. And then when it created that big wick and didn't close above that, that showed us that, okay, this is probably going to be the more trustworthy narrative. It's still bearish. They just wicked out and manipulated the crap out of people and got them out of here. And then just continued to kick back in line with the downside delivery. Right? This is why the 3 PDA rule is so important. And if one time frame shows that it's being broken, it's like in this case the weekly chart, and you're trying to consider, okay, is it changing the overall delivery? Is the narrative now shifted? You take that information and you go back and look at the monthly chart. Just move up again in time frame. Does it agree there too? And then when all 3 of the time frames agree, the monthly, weekly, daily, that's how, along with the 3 PDA rule, taking place on the highest time frame and then eventually manifesting again here on the lower time frames. If all that stuff can agree, then you know that you could continue to support the fact that, in this case, price is going lower, right? But every time you see a possible change in a narrative happen on one time frame, if it's the weekly or the daily, you still got to move up to the monthly. Or if it's, this happening on the daily, you still got to move up to the weekly to see if it's confirmed there, right? If it's still going to confirm that it's shifting, or maybe it's just a manipulation on that daily chart within the weekly price action, right? The weekly time frame price action. Does that make sense? That is a very good question and a very important piece of the puzzle that I just mentioned to you guys about validation, invalidation, and time frame to time frame navigation and confirmation. I mean, that is like so important what I just said. It's so important. The 40-day look back low, previous week low, looks nice. You're talking about about this, right? About the DXY. Yeah, we'll take a look at that too. But yeah, hopefully what I just said kind of identifies what it is that we're looking at for the DXY. We'll see what happens here. I don't think that we're going to break outside of this daily fair value gap. Remember, we're still in a market maker sell model, right? The run higher and lower, remember, from the 4-hour and 8-hour, right? This low down here ran up. It's kind of fizzled out in anticipation for what's to come. It's just really traded back and forth between this previous daily fair value gap. It's basically balancing and spending time there ahead of the rate announcements that are probably going to tank this lower. It's making people think that this is all strong support. So let me see. Tyler said, yeah. Fred said, yeah, makes sense. Same with the session bias within the daily. Yes, 100% Fritz. Absolutely. Game changer for me to get a grip with this. Perfect. Perfect. I am grateful to hear that. Yeah, very, very, very powerfully important stuff. I mean, everything we talk about is pretty damn important for the most part, but and it all has its place. But that's why it's important to have someone able to be here and willing to sit here and navigate you through some of the fog, you know, and some of the stuff that's important and how to use this or how to use that. It just helps you learn faster. I know it helped me, that's for sure, when I had my mentors doing this. That's the alignment for confirmation confluence. Yeah, it's part of it for sure. Yeah, Tony, you know what's up too, right? But yeah, if any of you guys that are on the call have questions about anything that we've talked about a lot so far. But again, don't hesitate to interrupt me if I'm in the middle of something. I am more than happy to go back and revisit some of the stuff that you guys may be confused with. Because again, my goal here is not to just fly through it and sound smart. That's why I take my time. That's why I pay very close attention to detail, and I don't let any rock get unturned. Okay, every single element is being dissected and looked at, right, and explained and talked about and highlighted. Okay, because I don't want any of you guys to fall behind. I don't want any of you guys to feel that, you know, this is too difficult, it's too confusing, or you're lost, or there's a gray area. No, there's no gray area besides the fact that this is based on probabilities. Other than that, it's very much organized to the point. This is how you do this or that. You know, there's an answer to every question. You know, so and there's a place for every tactic. All right, so yeah, with that being said, thankfully that makes sense. And if you guys got questions throughout, let me know. But yeah, that's essentially my opinion on what we are looking for in the DXY. Again, all these assets we're doing analysis on is going to heavily be waiting for the rate cut. And we're going to see what the price action is going to be as a result of that. It may have a rate cut that comes out and then a dynamic slice to the downside, especially if it's going to end up going higher. Because if you're smart money, what are you thinking? We need to get sell side liquidity to pair these billions of dollars to go higher, because that's just what it is, because rate cuts are good. So if it opens up, just like NFP will open up sometimes, have a strong movement that takes out overnight liquidity or previous day's liquidity, and then just like rocket fuel flies to the buy side or vice versa, right? It's going to be a very similar thing with the interest rate market analysis or the interest rate announcement, right? It may have that impact given it's been such a buildup in anticipation for this coming. So keep that in mind for the coming weeks ahead of this new quarter, ahead of the rate cut announcement. This week is powerful with rate cut and NFP. Yeah, this month, right? This week, the rate cut's not coming. It is going to be NFP, though. So NFP is going to probably set the stage, potentially be used to push against what the rate cut's going to do. You know, it may use NFP to manipulate price against what the rate cut's going to do what I just said, and maybe take out sell side for the indices and foreign currencies. And then on the back end, we'll have the rate cut come out, and then that may be what sends price to the buy side. Of course, this is just anticipation, right? These are assumptions that may take place. You know, we're obviously going to have to deal with it day by day, but I think this is a potentially accurate way of viewing what the landscape is for the news and what it could do. And, you know, we'll just keep this stuff in mind. You know, it doesn't hurt to try to paint out anticipation. And if it's wrong, it's wrong. But I think, honestly, the narrative is going to end up being bullish, because there's 100% strike rate for bullishness when it comes to rate cuts happening when equities or indices are at all-time highs. It's 100%. And if that's going to be the case, we know the impact that has to take, or the things that has to take place between the other assets. If indices are going to go higher, currencies are going to have to go higher, DXY is going to have to go lower, the bonds are going to have to go higher, and the yields are supposed to go lower if that's going to be supported and healthy and not cracked in correlation. So that's why I think this anticipation is high probability. So we'll see if that's it. Fritz said, are we in any market maker models for DXY currently? Yeah, we're in a market maker sell model here still, right? If you're looking at it from the 4-hour, let me go to the 8-hour, right? Here's the start of it. If we're going to end up going lower, and that's where we're headed, we're inside of that, right? The low here can be looked at as original consolidation. We got accumulation, reaccumulation, smart money reversal, balanced price range from the smart money reversal, overlapping, supported this being the first stage distribution. And now we're we've been playing around inside this lower portion of this potential market maker sell model that's kind of been dragged out, building liquidity, basically taking both sides of liquidity too. So it's unseated anybody that is prepared to try to take a short or a buy. So, and that's ahead of a rate cut, ahead of a heavy news event coming. So this sets the stage for them to have now unseated everybody, okay, built up positions, accumulated. That's what a consolidation is a lot of times, accumulation, in preparation for them to get that rate cut, which then may send this dynamically to the sell side. So yeah, that hopefully answers your question there. Eyes relative equal lows around $89. That's a bit too far. That's a bit too far. That's like way down here. Yeah, that's a way too far assumption. That'd probably take 3 years, 4 years to get down there. That may be the case, right? It may end up being that, but yeah, it's that is a little too far out there for us to use it as something useful. We want to make sure we keep it, somewhere in here, unless of course it slides down there. But until it gets down there, this is of no interest to us. So don't really concern yourself too much with that. Yeah, no, you don't need to look that far. I'm glad that you pointed that out, because that's something that a lot of students get stuck with. I say stick to the higher time frame. They'll go to 3-month, 6-month, yearly time frame, and they'll look at this stuff, not realizing that what's important is what's in front of us right now. The most near term, right? The current candles high and low from the monthly chart, that's your range of opportunity. Anything in close proximity to that, like maybe this low, right? This low may be important. There's a gap in there, a little fair value gap. That may be what price targets if we get below this, right? So I'm really grateful that you brought that up and said that, because that helps me remove that like too far out opinion or interest to look for something so far out. So then it kind of helps you narrow your focus a little bit more. Yeah, if it does want to get down there, we'll have to get a little closer to that to look for that. But overall, without us aiming for this low down here, we already still have targets down below, supportive levels above us that are more near term. And then, like I said, each one of these lows is a monthly low. So that could be used as liquidity and a target for this move to continue going lower, right? So that kind of removes our need to look for anything beyond that. So it's kind of like the why. Why is this not important? Because of what I just mentioned, right? And then we got this wick. We have quadrants in that wick. We have this one too. So those are near-term targets to 50%. I can mark that out. That's something that may get used very soon. Where is my wick? Monthly wick, there it is. All right. Look at the chat. Coincidence that it coincides with the coming rate cuts. Yeah, isn't that interesting, Fritz? Isn't that interesting? It's amazing how all this stuff aligns. It all works together. It's all meshed together, and it creates this thing that we call the markets. from real world things, economic policy, to technicals. Absolutely scripted. It makes you start to feel that, once you start realizing this, it makes you start to feel like, dude, how much of the world, of our lives in society, are scripted? If they're able to script real world events with the markets and tell the future in that regard, like what's going to happen, how much of the real world is not real? You know what I mean? It makes you start to think, like, at least when I started learning this with ICT and started hearing some of his conversations about, some of his tinfoil hat stuff about the real world and the markets together, how it's so scripted, and a lot of real things, or things that we think are real in real life, are scripted or turned out to be scripted. It makes you wonder. Makes you really wonder, but without getting too deep into that rabbit hole, everything ends up lining up together. Everything works hand in hand. Every element that we talk about in these long Sunday calls, everything is powerful. It has a piece to the puzzle. Everything. No one thing is less important than the other, because it all works together. It's like your body. Is there one organ that's more important than all of it together? There could be an argument that some are, potentially a little more valuable. But it all creates the human being. Just like how all these different things that we talk about create us as the trader and the market and the thing that we navigate. And perhaps so less structure on the higher time frame and more recent highs and lows. Yeah, most recent highs and lows and the current previous highs and lows, right? And then the most recent PD arrays that you can find that are in close proximity to where price is currently at the moment. Those are the important elements. Every time you look at one time frame, that's the first thing you think about, right? Like for the daily chart, what's the most important for us on this daily chart? Is it this low down here? This low? This high? This fair value gap? Something over here? Well, if it's a daily chart, it's this. Friday's low. Because when the new week starts, the new day, what's it going to refer to? What's it going to open up inside of? Friday's range. Right? And as you go out, right, so you go to the, a little bit beyond that, what's in close proximity to that PD array wise? This low. And then if you move up to the weekly chart, you do the same thing, right? You do the very, very same thing. Okay, you look at the weekly. Where are the most important PD arrays here? Right, like I've mentioned in some of the other Sunday calls. Right, it's going to be the current high and low, and then close proximity previous highs and lows. Right, previous candles ranges, because these are weekly ranges. And so if price opens up here, we're opening up inside that liquidity. So is this more valuable than something here, or this? Right, neither. It may be your overall, scheme, like that's where you want to get to long term, but on a day-to-day, week-to-week basis, month-to-month basis, depending on what time frame you're looking at, it's going to be the most recent liquidity, because that's where we have to pass through first in order to get to places like this, or lows like this, or like this. It's going to have to break through this low and this high. So this is actually the most important aside from this, right? Regardless of what direction you think it's going to go in, right? We obviously think it's going to continue going lower, right? But hopefully this is narrowing your focus, everyone. I've been pointing this out recently. The last maybe like the last 5 or 6 Sunday calls, I kind of pointed this out. But I'm glad to reiterate always. Important aspect I may have not clarified in my analysis. Yeah. We talk about so much stuff, Fritz. I don't blame you. But that's why it's so repetitive, and that's why I don't really change stuff up. You know what I mean? It's always the same stuff over and over and over. What I find important in the chart, the only variable is if we're in a different place in the chart, right? Everything that we look for, it's a list of things, and it has to do with the highs and lows. It has to do with our analysis around bias and narrative, with like the different assets and the news, and how all that affects what's going to happen. But every time you look at a chart, the very first thing you look at is the current candle's high and low. Doesn't matter if you're on the yearly, 6-month, 3-month, quarterly, monthly, weekly, daily, 15-minute, okay, 1 minute, or not 1 minute, 1 hour. The deeper you go down below, the less important some of the previous candles become. But even down in those candles, wicks are still important. All the different things are important. But when it comes to bias and narrative, that's why this aspect of things is so important for these time frames. Right? So yeah, hopefully that makes sense as far as why this is even more important, why this way of doing things, or perspective, I should say, relative to liquidity and PD arrays that are in close proximity. Hopefully you understand why this way of doing it is so important. Again, it just helps you narrow your focus to what's truly going to be used near term as a day trader. And you obviously could get the grand scheme of things with things like this low, or this low, or this low, or this high and this high, or like wicks and whatnot, right? So yeah, hopefully that is helping you guys narrow things down. Again, we're going to do this every single week. We do this every week. So if there's ever anything that you miss, you'll catch it eventually, because you're going to hear it again and again and again and again by spending time here. It's a good example of when we go into a video, or if we go into a live call, or if we go into any type of lesson, where we're currently at with our mindset and our experience, we only have a certain window of, or a certain view of what's important at that time. And every time you watch a new video or your wisdom and knowledge increases, that window starts to open up, right? So your understanding of what's important starts to widen. So the next time you watch a video or listen to a live stream or go through a specific topic, more things are going to seem important, because your awareness to what's important has now expanded. That's why when you watch ICT's concepts or his content or my content or anyone else that knows what they're talking about, and you're still learning, it's important to go through them a couple times, because today your knowledge is in one place, but next week your knowledge is going to be a little wider. Your experience is going to be wider. Your understanding of what's important is going to be expanded now. So that's why it's so important. That's why you always hear people talk about, I watched it 5 times, I did this or did that, and it seems like I always learn something new. It's because of this element, right? We're constantly evolving as traders until we get to where we're trying to go. And then even then, we're still evolving psychologically, even when we know what we're doing. So it's a constant growth period that happens. It's a journey, a forever journey. And so yeah, hopefully that makes sense. And if you guys didn't realize that that's a reality in all of us as we're learning, especially this stuff because it's so technical, hopefully you're aware of that now. And it kind of shows you the importance of being able to go through things more than once. And why it's so important to hop on these calls every week. Join me every week, because we're doing the same stuff. And you're expanding your knowledge every week. And you see things play out, and I call this, and it works, and this and that. Right? So consistency is critical for you to be consistent, for you to grow, for you to learn. If you're with someone that teaches and you like their style, or you feel you're learning stuff from them and it's helping you, it's important to show up as much as you can, and keep your sphere of influence small, so you're not getting dragged all over like a rag doll. And I'm an ICT purist, like hopefully many of us are in the chat, in this community. So everything you learn here is not going to conflict with what ICT teaches. It's going to fit like a beautiful puzzle. Excuse me. right? So, say that's why you got to watch who you listen to, because a lot of people will try to pull you into their way of thinking, and sometimes it's going to be something that they supposedly made up or created or discovered when they didn't. They're just ripping it off, and that puts you at a disadvantage, because then you'll learn from so and so, and the wording will be different, and then you try to go learn from the source or someone like me, and your verbiage is all screwed up, right? Like what this thing is named, by this person versus what ICT himself calls it, and it just makes you confused. There's enough to be confused about by just listening to ICT's concepts, okay? Like learning it from the source. There's no need for mentors to make it more confusing by trying to feed their own ego and make themselves feel good, or like there's something worth listening to because they created something or renamed something. It's bad for everybody. It's bad for them because they get an ego, and it's bad for students because then it kind of blocks you off of learning from ICT or someone like me, because this guy has a different name to it, so it must be different, all right? So it just complicates things worse. And I hope and pray that you guys don't fall into shiny objects. Obviously I've mentioned some of the other ICT charter students that I absolutely respect, that are ICT purists in themselves, like Jade Cap, one example. The beauty behind watching people that are purists to a strategy or a perspective in trading is, if you stick within the purists, you're not going to have too much of a problem. And again, things are explained in a simple way. They don't have to be overly complex, which I hope you guys have been able to experience here. But yeah, this is very important for me to mention, because a lot of people like to bounce around and, this guy's entertaining, and this guy said this, and blah, 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 blah. This guy has a Lambo, and I'm just like inspired by whatever imagery he's given. And then you go there and you get sucked into his way of thinking, and he's not actually profitable. And then you get sucked into their way of talking if it's different than ICT, and then maybe you'll fail with their stuff, but then you try to come back to ICT stuff, and then it's even harder, and it's going to take even longer, because now you got to shed the BS that you were fed by this idiot, whoever that is, that tried to rename things or teach things in a different way to sound different when it's really just the same thing. So just make sure you guys are careful with that stuff. But yeah, even though, let me see. The closest interrange liquidity. So top down for every time frame starts with the current, then past candle, then internal range liquidity and extra. Yeah, that's a good way to look at it. If you're looking for bias and narrative, though, this is a very important distinction. Bias and narrative wise, within the ideas that I've just been talking about and what's important, you want to make sure that you don't pay as much attention to the previous candle in the same way we do on the higher time frame when we go to like the seconds chart or the 1 minute chart, right? It's similar, but again, you're working within the context of this higher time frame idea, the draw on this time frame, right? And the narrative that you've painted from this time frame. But yeah, everything is subservient to these higher time frames. So yeah, hopefully. Oh, okay, it's okay. I'm glad it's helping you, Fritz. All right. Did any of you guys have any questions about some of the stuff I've been talking about? About like the bias and narrative scenario. Is it clear as far as what you should be looking at? I've talked about it a couple of times, but I know some students will miss it because we just talk about so much stuff. So just let me know in the chat if everything makes sense. Just throw a 1 in the chat, and then we could speed on through this. Hopefully you guys understand what my assumption is for what I believe DXY should do. We are in consolidation, but I'm assuming that if the rate cuts do what we're expecting, it's going to send this lower. We may hang around inside this consolidation still as we anticipate NFP, FOMC rate announcements coming out later in the month. So, we'll see what the vibe is when we open up today And then, of course, we got to let the holiday pass. So not much of a decision is going to be made. We're literally just undecided right now, but still leaning towards more short ideas because of the higher time frame. And that's just what it's been. Another level you could identify here, not only this wick was being respected, but now we're trading through this wick. So the middle portion of that wick is going to be important too. Ironically, if you take this wick here and you drag that over to what you see on the daily chart, look at how perfect that delivery was from that high. It's literally at the monthly 50% of the down wick. It hit it to the tick. I mean, that's just amazing when you're able to see that. And then of course you also could use this too, right? It pretty much used this wick, failed to get to the mid. Why did it fail to get to the midpoint here? What could possibly be stopping this midpoint from being targeted and it reacting from there and not going to the wick? What could have stopped that? The monthly 50% of the wick. Right? Very interesting stuff. Okay, so yeah, hopefully, okay, yeah, it makes sense. Okay. All right, so with that being said, that's my opinion on bonds, yields, and the DXY. So now let's kind of go over here and see what's going to happen here. It looks like everything is healthy. It looks like, in anticipation for the interest rate cut that's coming and just everything that we've been talking about, it looks like we have basically just traded into the breaker here, which is the reverse to what happened here on the DXY, right? A reverse lower from the breaker, bearish. And then you look at the foreign currencies and they're basically doing the opposite, as they should. Breaker, okay? And now we're delivering. So we'll see if price wants to trade through this order block here on the monthly chart. That's a strong indication if we could deliver through it and trade and close through the 50%. It's a different story if it respects this and then violates this low, because then that'll turn this to a bearish order block. That'll also show that this respected a bearish order block. But we have potentially relative equal highs up here. It did peak above that. That's what triggered in the response. So opposing PD array triggered in, or an opposing higher time frame PD array and a higher time frame liquidity pool being triggered inside this run higher, ended up triggering the retracement back to a different PD array that then could set us up with a further run to the buy side. Failure to get down below this into the fair value gap, basically showing massive support for this to want to run higher from this breaker, bullish. And so, yeah, price is just going to continue. We're going to assume that's going to be the case for the currencies, and then maybe even be excited enough to get all the way up into here eventually. It's a little bit far away, so honestly, we'll probably keep this in our mind, but we'll look for some of these closer highs that could potentially be targeted. Yeah, we got the high there. Before we even get up there, what's important? What's more important? This is going to be more important, okay? Like we've been talking about throughout the whole entire call today. It's been a pretty dynamic call, right? Those of you that have been with me for a while, like throughout the whole day, how do you feel about today's call? I think we've talked about a ridiculous amount of insane things that most people do not touch on because they don't get it. And hopefully it's made crystal clear sense. Tony says, that's why this education on the economy is important. Exactly, bro. And having a trader you could learn from that understands a high level of the economy, right? At least like what impacts what. I mean, that's just like, it's ridiculously invaluable. And I got it from my mentors and my own research, so now you're getting it from me, and hopefully it's making you interested in digging deeper into how things really work, because ICT concepts mixed with a fundamental understanding of how the economy works. I mean, it's incredible, So let me see, Fritz said, so the monthly bullish fair value gap on the current range may not need to be revisited. Enough bullish PD arrays before to nullify the retreat. Yeah, so are you talking about the fair value gap down here that was left? So remember in the PD array matrix, here, let me actually go pull it up real quick. Let me actually go pull up the PD array matrix and mention this real quick. This is very important. As far as why we don't need to expect that to be targeted. Let me see, where is it at? Oops. Here's another very powerful piece of information for you. So I hope you guys are listening. Okay. Some of you guys I may have talked about this with, if we've had a conversation about PD arrays. Okay. Shoot. All right, so when price is going higher and going lower, okay, within a range, we have PD arrays and a PD array matrix. Okay, when price is going higher and you're looking for it to go lower, we have a PD array matrix taking place, right? Or it's in place. And if we're going higher to go lower, but then to go higher again, basically in a bullish scenario like this, there's PD arrays opposed to what price is going to do, right? Like going higher, right? The opposing PD array, which would be these premium arrays. And then there's discount arrays, which is where you would like to anticipate or frame a setup on, right? Or look for price to reach into. Well, when price is reaching or seeking these PD arrays inside the PD array matrix within premium and discount, right, or a dealing range, there's a specific order in which these PD arrays are targeted. Okay? So for example, if there is a bullish breaker you're looking to execute on, which is the case for what we were just talking about, where is the fair value gap in comparison to a bullish breaker inside the PD array matrix order of operations here? Is it above or below? Is it before or after? Two below. So would you say that a breaker is before a fair value gap, order block, rejection block, and an old low? Would you agree with that? Yeah, so since you agree with that, and this is the order in which the algorithm seeks PD arrays within a range, if there's a fair value gap, an order block, or anything else that's below this breaker, would you believe that, it's most likely going to be left? Would it make sense that it would be left in place if the breaker is the first one in the order that price seeks these PD arrays? Because that is part of the reason, the order in which price seeks PD arrays in the PD array matrix, the method behind why this is so important, and the reason that ICT has it in the order that you see here is because one comes before the other, and then one comes before the other, and the other, and the other. So if you have multiple PD arrays inside of a price leg, the way that you select the right one and the way that you know which one is going to be left and not traded to is by understanding the order in which this PD array matrix operates within this algorithm. So this is what this gives you more context aside from balanced price ranges. It gives you more concept or more context to why certain order blocks and fair value gaps reasonably get left behind. Is this fair value gap going to fill? Right? Here's another piece to that understanding as far as whether it's going to get filled or not. The PD array matrix. If there's a breaker before a fair value gap that's below or an order block that's below, it's most likely going to leave them available and use the breaker first. And that's going to be where it delivers. Okay, and then of course the same thing is true if it's in a bearish scenario. There's that typo up here. Ignore that. Pretend it says sell scenario. Right? It'd be the same thing here. Right? If we were going lower, higher, reaching for a premium to then go lower, if there's no breaker available, mind you, this is very dependent on what's available in the range you're trying to trade. It's not every single one of these things that's going to be there for you to pick and choose from. It's sometimes going to be a breaker and an order block. Sometimes it'll be a breaker and a fair value gap and an old high. Right? So whichever one is available, you just have to remember or keep this in mind, right? Keep this little thing in your screenshots, in your studies, and just keep in mind what's available. If there's a breaker and a fair value gap, but the breaker's before the fair value gap, it's most likely going to hit the breaker and deliver and leave the fair value gap. You know? Another thing too, I can tell you that if there's a breaker formed and there's a fair value gap above it, that fair value gap most likely traded both sides of the market, right? One candle went higher, the other candle went lower. What does that create above the breaker? Overlapping fair value gaps. What does that create? That creates a balanced price range. So it doesn't have to come back. So that's why it'll leave the fair value gap if there's a breaker available. Now what I'm mentioning is a high level of understanding about how these PD arrays operate. Again, we could take it even further, but I don't want to get too complex because I'll get you guys to be confused, and that's not what I want to do. But the reason I just mentioned the fair value gap thing is because I've mentioned this before. So hopefully it fits like right into your understanding already because of the fact that I just talk about it all the time. You know, and there's this type of explanation and understanding that can go really deep for each one of these PD arrays. You know, but again, you don't need all of them, right? But hopefully this made sense. Let me know in the chat if what I just said makes sense. And of course, we'll get to the indices later. I like when people come and ask for certain things. I'm like, okay, I'll get to it. We have a process. Okay, we go from one end to the other. But yeah, so, okay. So Fritz said, but like we spoke about previously, if price hits a higher time frame breaker, we would see a lower time frame fair value gap. Yeah, well, again, you just have to figure out which time frame you're basing the framework off of, right? Because there will be fair value gaps potentially on the lower time frames before what's happening on the higher time frame, right? Oh no, Fritz, you don't gotta be sorry. You don't gotta be sorry. I encourage you to ask questions because students that probably don't even know that this is a question they should ask. They probably never even thought about this. That there's an actual order in which things are delivered, and why the PD array matrix is important. They're not just randomly strung along here. It literally seeks certain things, and the order in which the algorithm seeks these PD arrays a lot of times is the reason why certain ones get left. So it answers kind of like, how price seeks PD arrays and what it means when price is seeking certain PD arrays inside of a range and why certain stuff gets left available. Why is an order, like you may use order blocks and fair value gaps and that's all you look at, but you're never looking at breakers. And you see that a lot of times the breaker is preventing your fair value gap or your order block from delivering. Right? Like you'll try to get into an execution, wait for your setup, and it just won't manifest. It'll attempt it, but it'll stop short. Well, a lot of times it's because this is at play. This is what is stopping it. Because you're not aware that there's a breaker, right? Or if you're looking for an order block to deliver, and it's just trading to fair value gaps and delivering away. Sometimes order blocks and fair value gaps are obviously together, right? So you can use them as a combination. But sometimes it won't. Sometimes it'll just use the fair value gap. Like, for example, institutional order flow entry drill. There could be an order block well above a fair value gap in a range. But price could just go to an institutional order flow entry drill fair value gap and leave the order block. Right? Obviously, there's context as far as why that takes place, which I've spoken on before because that's one of my models. But I'm not going to get too deep into that right now. Right? But that's just an example, right? So that's exactly what happened to, first said that's exactly what happened to me in the past. waiting for a fair value gap to fill, and then price doesn't go into it. Yeah, well, this is part of the reason why that may have been the case, right? I would really enjoy for you to send me a screenshot of an example where this happened to you. And then maybe we can talk about it privately, or, if you want to talk about it publicly, we can do that too. But yeah, I would definitely enjoy seeing maybe what that looked like, so that maybe there's other context I could give you. Same goes for all of you guys. If you have any issues, right? If you want to send it to me in the free Discord, if I have time to get to it, I will. When I'm obviously done catering to my private group, because they get priority, right? But all of you guys are my priority, right? So I get to all of you eventually. But yeah, so yeah, hopefully that kind of gave you some context, I guess, right? But yeah, what I just talked about, I mean, this whole conversation, this whole day has been extremely, extremely dynamic. Like, the things that we've talked about up until this point should have you already determining, if you've been here for a while, you should already be determining what it is that I think the indices are going to do. I mean, we've pretty much done all the back end study and have a solid understanding of what the general market is doing in terms of risk on, risk off, and what the risks are and what we're going to have to wait for, and what is more likely than the other thing, right? Like, which direction is more likely than the other, right? We've already pretty much established the baseline for what we're going to talk about for the indices and for commodities, because whatever this does, whatever the indices do, and whatever the foreign currency, the foreign currencies, the indices, whatever those are going to do, and what the DXY is going to do in reverse to that, dictates in many cases what commodities are going to do, like gold and silver. Isn't it ironic that gold is doing the same thing and has been doing the same thing with the bearish DXY? Isn't it crazy? Right? Like, this is the importance of what it is that we're doing and why we do it this way. And I don't just jump to NASDAQ or S&P or whatever other asset. We do a full, thorough analysis, and then we get it all in alignment. And that's how I've been able to call the market at almost 100%, week to week, month to month, quarter to quarter at this point, for 8 straight months. It's not at all sitting with me just going to the NASDAQ or the S&P and that's it, right? High accuracy comes from depth and deep understanding, and that's why I try to share with you guys and give it to you. But some people just don't have the patience for it, and sorry, I'm not here to cater to you if that's the case. There's been 34 people that have hopped on, and a handful stay on. I mean, that tells you. Think about it. Do the percentage on that. How many people fail in trading and can't be consistent at all in trading? It's a high percentage. But how many people succeed? It's a low percentage. And you look at the stats, how many people hopped on versus how many people consistently stay on, even with the results that I show. I mean, it shows you why people fail, why the statistics are the way that they are. And again, I'm not here to entertain people. You know what I mean? So it is what it is. If I could make 100 people rich, I don't really care how many people decide to be entertained. I'm here to help you change your life. I'm here to help you become a trader. I'm here to help you build a passion for this industry and have results that are like none other than ICT himself and some of the other high-level ICT traders that do this. So it's unfortunate that not everyone's going to be saved. It's unfortunate that most of the population has TikTok brain, and unless you're jumping around with bells and whistles or cussing people out or doing crazy entertaining stuff, attention doesn't get held, and it's unfortunate. But we're going to keep smashing it in our little corner of the internet. Let me ask you this: do any of you guys trade gold? Have any of you guys been looking at gold and silver, and like crude oil? I mentioned it the other a couple weeks ago, for crude oil to go higher and gold to continue to go higher, and as you can see, I was correct again, right, on an asset that I barely look at. But it just shows you the power and the depth that we have in our analysis. You know, all the critical, important elements and how they all work hand in hand together. Been burned too much with gold and currencies. Yeah, I'm not talking about in the sense of like trading it, but just like bias and narrative practice, because it is part of risk on, risk off. So if gold's going higher, it's just it's another asset to put in line with the risk on, risk off analysis and the overall market sentiment correlation. It's just because the more things that are in alignment moving together, the stronger the trend is that you're in. Right? Oh, okay. For sure, Fritz. Amazing. All right, so I understand correlation. Okay, perfect. All right, so yeah, I'm not gonna get too deep into this, but you know, we'll look at this, right? It looks like it's just gonna continue going higher, right? We got everything that we look at, everything that we do for the other assets, we just do for this. It's the same. Look for the most recent highs and lows. Those are our near-term liquidity pools. Why? Because when price opens up on the next candle, it's going to be within that range, right? And then, you know, where could it go? It's just going to keep going higher. Use this up wick as a support level. This is a monthly wick, 75% level. It shouldn't have to break through that because that's one big monthly wick, right? If it breaks above it, which it has, it shouldn't have to come too deep unless it's going to consolidate, which it very well may, because we have the rate cuts, which also influence or impact this as well, in the same way that it impacts the foreign currencies and the indices. All right, so yeah, hopefully the currencies make sense, right? Just overall, what we're looking for hopefully makes sense based on all the stuff that we've talked about from the other assets up till here. Then yeah, we'll come over here to the indices and talk about where we believe that's going to go. All right, so go to the monthly, and not much to really work with the monthly. We're about to end this monthly candle, so yeah, we got the previous month's low here, current monthly low. Notice how this month, what did it target? What's the most important thing that it targeted this month? This is our current monthly candle. When it opened up, what did it target? The previous candle's high on the monthly chart. So this is like a good example of why what it is that I'm saying is so important. It shrinks things. It narrows your focus. And this is a beautiful example of that. Same with this, and same with this. Right? So yeah, if price did want to retrace and it wanted to, you know, maybe drop in anticipation for like a manipulation for the start of this new month, because again, we're in a new month. So think power 3, right? Think about the quarter adjustment. We're in a new quarter. Think power 3, right? So if we're opening up here, if we're bullish, what happens in power 3? Even in a longer term view, price most likely is going to go against what it's been doing to get below the open price. What could it reach for if it does do that, which I'm pretty sure it will? It could reach for this current low. It could reach for that low. But what is next to those levels? This monthly fair value gap. If we go to the weekly chart, what is that? It's this, right? That monthly fair value gap is right here. But this is on the weekly perspective. What else do we got? We got equal lows. We got this order block. This order block has helped us continue to trust that it was going to go higher, right? But now we're at a level where we're anticipating a rate cut. We're breaching all-time highs. We have somewhat of an SMT here. If you look at this candle, this high and that high, we got lower highs there. Yeah. Very interesting. Let me just kind of let me just clean it up real quick. Right, so yeah, we got SMT there. We do have SMT. I believe we had that at the lows too. No. So yeah, we got SMT at the highs in anticipation for the rate cut. We got relative equal lows down here. We got a new quarter coming in. We got a new week, a new month. So we got to think power 3. We're at all-time highs when this power 3 idea on the higher time frame down to the daily chart or weekly chart may unfold ahead of the quarterly adjustment, ahead of the rate cut, which again is going to send price higher. So if we sit back and think for a second, if that's the stuff that's ahead of us, and rate cuts for the last 20 rate cuts when they're at all-time highs on the indices has resulted in the next 6 months to 12 months being bullish, wouldn't it just make sense if that's going to be the case, that this is pretty much setting the stage for this to decline, sweep out these relative equal lows, get us to a discount, then use the rate cuts to want to skyrocket? Wouldn't that just make sense? Like, if you were smart money, would that make sense? I think it would. I think that I could visually see that happening. If not from the daily chart, from this weekly chart. Maybe even on the 2-week chart, we could see that happening. If this was the 5-minute chart, this is what we were looking at. This fair value gap would not be unreasonable for price to reach into to then continue going higher. That's also kind of in alignment with this as a breaker, a 2-week breaker. But this one too, right? We may see an SMT with that. Maybe, one of these will come down and hit that right between the S&P and the NASDAQ. And then the rate cut will come and then skyrocket. Right, so you can kind of see how timing-wise, we have things slowly manifesting. Right, things are starting to become a reality. Right, like the rate cuts, they're coming. Right, it's over the horizon, and we got a new month, a new quarter, new week. We're thinking of power 3 from all those perspectives. That is I was trying to think of a good analogy to put on there, to put on what I've just been saying. Chess pieces being set is absolutely amazing. That's an amazing way to look at it. They're being set, absolutely, for the main event, which is going to be the rate cut. And that'll set the stage for us to potentially have the rest of the year be a bullish rally, unless, of course, America goes to war or some other craziness happens. Or we'll get into a seasonal influence as well that has somewhat of a bearish tone to it. That could trigger in a small retracement off the heels of a bullish delivery from the rate cut, which again has had a 100% strike rate. When we're at all-time highs and there's a rate cut in the indices, price ends up for the next 6 months after the rate cut comes out, it ends up being bullish. I posted that data, right, where I got that data, that information. Ironically, the bar chart social media, their social media page on X, they're the ones that came up with it. And they showed their sources. And, that's fascinating. I never knew that, right? But then they mentioned it, and I'm like, wait a minute. And I thought about back on the rate cuts and what I did on the last rate cut that was at all-time highs. And I was just thinking to myself, like, man, like, that's actually true. That's data that I didn't keep tabs on. I can't keep tabs on everything, right? I try my best, but, it's good to be reminded so then I could just, stash it away and then remind you guys for future reference, right? So yeah, with that being said, it, like Fritz just said, it seems like the chess pieces are in order. And because, all these things are in effect, I could see a reason for them to go down and take these lows out. But that's just within the context of us anticipating the rate cut and then that potentially giving us a rocket ship to the buy side through the bullish seasonal influences that come later in the year throughout the fourth quarter. The fourth quarter is generally a very fun quarter to trade. I mean, it's very fun. And then the quarter that's prior to summer, the third quarter is the summer months for the most part. So the second and the fourth quarter are generally some of the funnest trading throughout the year, at least from what I've experienced. And that lines up with seasonal influences and just, how price operates really, on a yearly basis, especially based off the last 6 years that I've been watching it with this perspective. I mean, it's proven to be the best span of time, or best times of the year. Doesn't mean there's no opportunity in the other ones. Clearly, I've been doing this 8 straight months, showing you, especially in my private group, every single day that there's something to trade with high probability. On the 2-week for ES and NAS, we have a nice BPR to have perhaps consequent encroachment of a price to visit. Yeah, let's go check that out. You said the S&P and the NASDAQ? Yes, and this we have a nice BPR. Yeah, this here, I mean, if it's going to go higher, mind you, this is an order block. So if it's going to go higher and it's going to leave this stuff, I mean, I could see that happening as well. But it makes sense to try to make an allowance for if price does tank. We do have SMT, right? You see it even more clearly here. There's SMT at the highs going into a time where Power 3 is potentially going to unfold for the new quarter, new month, new week. So if we're thinking Power 3, we can't just see that prices continue to go higher and then just go in trying to push buys right away at the start of the month. We got to think, okay, Power 3, how does that generally deliver? It pulls against us. And then it goes later because it's manipulating, right? To then expand after, manipulation consolidation takes place, right? It goes lower to go higher when we start a month or a week or a new day, right? It goes lower to go higher and higher to go lower depending on what's taking place in the chart. All right, so I hope that makes sense. So yeah, again, we'll start here. Just do a quick overall mapping real quick of what's here. So we got this order block here on the weekly that we've been using. We do have this fair value gap. I've been talking about this fair value gap for weeks. So if we were to break down below this low, that sets the stage for these equal lows and this fair value gap to get taken. It's also the weekly fair value gap's also in conjunction with the monthly. Okay, so we'll keep tabs on that and see if we can get down below here. That'll set the stage for us to be confidently short-term bearish up until the rate cut comes out, and then we'll have to just be very cautious about bearishness. Right now, there's nothing on the higher time frame that shows our validation levels have turned off buy-side delivery. We do have some cracks in correlation with the SMT here at the highs, which I mentioned. So we'll keep tabs on that. But yeah, as I was talking about in the other assets, the most important things to look for going into this new session or the new week or new day or new month is going to be the current candles high and low based on the time frame you're looking at, and then the previous candles high and low. So we may get down into here, but we may also be able to frame something getting down below here if evidence starts to show, right? So we want to keep those things in mind. We do want to watch how this is going to behave, this bullish order block, and the 50% level. I say that if we break down and close below with a candle that closes below the 50% of this candle's body here, which would invalidate the bullish order block, I think that sets a stage for us to take this out and then probably ride it down to here. But once price gets down into here, if that happens before the rate cut happens, I'm not interested in taking shorts, just based on the historical data that has led to the rate cuts at all-time highs for indices leading to the next 6 to 12 months being bullish. So that's too much of a risk for us to push a short, if that type of scenario unfolds. But we may be able to try to frame something that gets down to here if what I just mentioned unfolds. And of course, I'll be updating you. I'm here every week. I'm, active. Okay, so you'll know if that's going to be my opinion. But so far, we're just in consolidation. You go from this low extreme to the high, measure it out. We're kind of just hovering around the equilibrium point. Okay, so go from this low to that high, equilibrium, exactly at equilibrium. And hopefully those of you that have heard me say it multiple times and talk about equilibrium, hopefully you understand what that leads us to, which is generally consolidation. The longer it hangs around equilibrium, we need it to displace out of it, okay, in one way or another. Otherwise, because it's a higher time frame equilibrium, it could choose to sit here for weeks if it wants to do so, simply because that's the dynamic of a higher time frame equilibrium. Okay, let me actually note that equilibrium so we don't lose it. Oh wait, whoops, actually I got it right there. All right. So yeah, hopefully that makes sense. All right, and I mean, very similar thing with this too. You know what I mean? We got this large wick though. There's some differences. Same thing though, right? Like I said with this, take the high and the low, high and the low. We do the same thing. Take this high and that low. This high was already purged, so we use this one. But that one was already purged too, and there's nothing really extra to look at. So we could just simply use this high as our important buy side if it does want to go higher in terms of targeting. And if we are to go lower and price maybe wants to dig to the sell side a little bit, we have this wick. You notice how it respected the 50% of that? So we're going to have to see something dramatic form, some really aggressive price action to really get us confident in the fact that price is in fact going to drop. Now we may see this SMT lead to this displacing lower, attacking this order block, and then this one starting to do what I mentioned we got to be on the lookout for, closing below this potentially and then targeting this low. So if that happens in the NASDAQ, that may allow for interest in this asset and this asset to decline a little bit stronger as well. The NASDAQ may end up being the asset that exaggerates down to the fair value gap. A scenario could play out where this declines into this while these two, the Dow and the S&P, don't. That's a form of SMT. Now, if we get that ahead of the rate cuts, that's just rocket fuel to the fact that price is going to just explode as a result of the rate cuts. But again, like I said, the first things you pay attention to is the highs and the lows of the current candle based on the time frame you're looking at. In this case, it's the weekly, right? And of course, you could take down the wick and then the low. But none of this is important unless it was to support a decline getting down through these levels first. Okay, we've got a volume imbalance. We have a wick, a swing low, the center portion of the wick, and then the order block 50% level. So only time I will be looking to be overwhelmingly bearish for the S&P based on the price delivery we have so far is if we break down below this low, because that would then turn this into a 3 PDA violation, and that turns us around to target this area down here. Okay, so hopefully that makes sense. Hopefully that was easy enough to understand. Those of you that have been here for a while or will eventually be here for a while, this is what I talk about, the same stuff over and over and over and over. It's never different. It just varies sometimes with certain points of interest that I just constantly smash on and just repeat over and over and over. So again, if you guys have questions, definitely feel free to let me know. We could talk about it. But hopefully all this makes sense so far. And let me ask you this. So just based off what I've just mentioned here, does it make sense as far as what my opinion is for the NASDAQ? Like what our expectation is? Of course, you encapsulate everything else we've talked about too to make that determination. But if I was to ask you guys, do you understand my assumption and our anticipation going into this next week? What would your answer be? Okay, yeah. Tyler said yeah. Wonderful. Tony said wonderful. Fritz, wonderful. Amazing. Amazing. So I got 9 people online or on the call with me. Welcome, by the way, if you're new. But let me know in the chat if you're new or, some of you guys that may have not answered. Just let me know if it makes sense. If you've been here, if you just hopped on, obviously you're gonna be like, what the hell is this guy talking about, right? but yeah, I do this every week, early in the morning. So, yeah, let me know if you guys are, if you did just hop on or if you're new, let me know in the chat. Do you have any questions? If you're looking at the chart right now, and you haven't been here before and it's your first time, do you have any specific questions? I have students in the chat that'll be willing to help you as well. Because if it makes sense to them, they could probably, chime in on a question and we could kind of have a dialogue for the rest of the call. We're going to stick to here, right? But of course, if there's no questions and, not much else to talk about, then, we can just put a ribbon on it and you guys could watch the replay. But yeah, I want to take this time, since we're pretty much done now. We basically looked at every asset, made a very detailed assumption as far as what we think price is going to do. And it's clear to most students from what I can see in the chat that it all makes sense. Everything makes sense as far as what we're looking for going into this next week. So yeah, let me know in the chat if you guys have any questions. We'll use this time for questions and any closing thoughts or concerns that you guys may have. I'll give you guys that time. I'll give you guys like 30 minutes for that. And if there's no questions, we'll obviously end a little earlier. But yeah, just let me know in the chat. Yeah, and if you guys get value, don't forget to like the video, subscribe to the channel. It helps me get in front of people that need some help with trading or just want to be around a community that proves they know what the fuck's happening. Okay? Day in, day out, week in, week out, live, completely transparent. Not like a lot of these losers on social media. Let me see. So I see ES was the only indice that swept yeah, it's interesting, right? That's the S&T. It's the S&T that I was pointing out. So that's one thing that leads us to the assumption that, we may see before this rate cut, we may see a decline, right? We may see a turnaround. Starting the new month, I could see that S&T leading into the reason for Power 3 declining, reaching for some of these lower levels we have highlighted before the rate cuts come in and send price to the buy side, as it's done the last 20 times it did a rate cut at all-time highs. And seasonally, we're going into a time where we're bullish. So seasonality is aligning. COT as well. Oh, I'll probably talk about that in my private group. Oh, wait, did I send it in my private group? Just know that COT somewhat supports the fact that price may want to decline short term. So we'll see, right? It's a lagging indicator, so we'll see if it unfolds. We're not going to get into seasonality right now. Right. I was going to pull something up until you forgot the hell I was going to pull up. Yeah. It's the weekly, so we'll put the weekly wick. Where'd it go? Alright, so yeah, we're going to watch this too. So yeah, just keep this stuff in mind. See, look at the chat one more time. See, NASDAQ Dow had inside candles. Yeah, inside candles mean an inside day. Like if one candle opens up within the previous candle, like this one, that's called an inside day. That is a low probability condition. It's similar to, you want to treat it similar to how you treat a consolidation or a low probability condition, because it's a small range and it couldn't even break outside the previous range. And if we're in a trending environment on the weekly or the daily chart for the higher time frame, being exciting, it's going to be breaking through the previous candles, just like how it would on the lower time frame. You know, it just takes longer on the higher time frame. You know, so if it can't do that, then clearly we're not going anywhere. So clearly you're putting yourself in position to have a higher likelihood of not being successful. Doesn't mean you can't be, you know, but you have to have experience to navigate small ranges. And honestly, if you ask a trader that, you know, makes big money, they'll probably tell you that it's just not really worth it. I'll just wait for a better condition. You know, so, you know, consider that as well, as a perspective to ponder, right? But yeah, you know, when to trade, when not to trade, right? It's a constant balance. Personally, it's different for everybody. I can tell you the times when I'm more willing to trade than when I'm not. I do it live, you know, I do it with you guys weekly. You know, share my thoughts in that regard, but it's going to be different for you. You know, I may be good at taking trending trades, and you may be good at consolidation, small ranges. You may not be able to get in line with the fast ranges, or vice versa. You know, it doesn't matter which one. Neither one is better than the other, because you could still be profitable, wildly profitable with anything. You know, it depends on you. It's the personal effect. But yeah, inside days, outside days, that's what happens when price breaks outside versus when price stays inside the previous candle's range on the time frame relative to the price action you're looking at. Right, so that's what that's called, and that's the importance of those situations, I guess. Yeah, Mike, that's a good way to look at it. Use it for study days. And most of the time, you can anticipate inside days when there's a heavy news event, when there's no news event, in anticipation for a news event. But then once that news event comes out, boom, it'll break outside, obviously, depending on what news it was. And yeah. And of course, when you see a consolidation on the lower time frame, when you move up in the higher time frame, what do you think's happening? It's creating an inside day or a seek and destroy type of day or an indecision candle on that higher time frame. You know, everything works together inside what these charts are telling you on the higher time frame. Dow's a lot closer to the previous high than ES and NAS in terms of near liquidity. The Dow is, yeah. Yeah, it pretty much is. You know, we're going to have to just see what's going to happen. We do have that SMT. It looks like the NASDAQ is going to potentially be the weaker or the more interested to offer downside. So we'll see. Like I said earlier, NASDAQ is always, for the most part, the most exaggerated. So if we do see a decline that reaches for these levels down here as the power of 3 manipulation, the NASDAQ, you know, more often than not is going to be the one that does the exaggerated effect prior to the big news that comes out, if it is going to lead to a large move. You know, that may be the case. Of something to consider, to just think about, but we're not going to marry that until it proves it. What proves it? Closing down below the 50% here, displacing, trying to get down below the low here. Once it does that, this wick will be treated as a balanced price range and a resistance level. And the only way that we'd be bullish again is if price was to break through back to the buy side, if that type of scenario was to unfold and we got down below here. That's how I would adjust and try to get in line from bullish to bearish. That would be my adjusting factor. We have a volume imbalance, the wick midpoint, order block 50%, multiple new week opening gaps. So again, if it got down there, why would you try to push a buy? You know, and plus if that happened and we have something like this available, what is the reason to not think that it's going to go down into these levels? At least before you look to anticipate the run higher, especially in the face of that type of condition, right? It'd be basically overlapping consolidation from this higher time frame, you know, returning back into the range from this low to that high. You know, if we move up, right, this high to that low, That's literally this range encapsulated. So we've had an inside 2-week candle, right? It's inside the 2-week candle we could see up in here. So we got an inside delivery in this as well. So you could just move through the time frames and see how the consolidation has been affected from the higher time frame down to, even the daily chart. But the daily chart, you could start to get a little more details and really start to navigate intraday volatility, and use daily candles for liquidity. We have this on the daily chart, right? We have this breaker. So we've respected this order block, right? Hit the breaker and the order block, because that's what this is. It's 2 overlapping. And then now price is displaced, somewhat got below this daily fair value gap. So before we even break down below this wick, that's what this is, right? This low here, right? But on the daily chart, we could start to see some earlier signs, right? Like if price was to displace through this low, right? We now have set up a potential inversion fair value gap. And so that turned into an inversion fair value gap. Trading like that, respecting the low of the inversion fair value gap, that should act as a balanced price range, right? We have a delivery to the buy side, sell side. So again, this is an order block, right? It's also a bearish breaker. We also have another order block here since we got down below it. That's also within, it's also within this fair value gap, right? So unless price in this case was to break outside of this 50% level and this inversion fair value gap, I do not trust buys. Like the likelihood of this potentially seeking this down here, because of the things that we've talked about in great detail today, I mean, it's too great. Being at the start of a new month and all that, the only way that I would look to get back in line with buys and somewhat put this to the side, the potential for the decline, is if we get price to open up and disrespect this order block and break through this fair value gap. Because right now, all this looks like, with the SMT and the anticipation for the rate cut, it looks like this breaker has held price. And now we have respected that. We got an order block here also with another order block. So, and then an inversion fair value gap that's overlapping. So are we really going to trust that we're going to buy in the face of this stuff being present ahead of a rate cut and the start of the month, the start of a new week, with power 3 being considered? Is it really rational for us to try to force a buy just because it's been going up from the past? Given what we know, obviously, for a new trader, maybe it makes sense to try to push a buy because they just don't know. But this is a time when you're in a position to wait. This is a time when you got to let price show you signatures. And luckily for you guys that spend time here, that support the channel, that hop on this regularly with me, you know that we can make sense of this and know when to buy, when to sell, when is a good time to wait, when to trade, when not to trade, right? So yeah, you see some of your thoughts on what we're talking about. Have a break and use it for actually good to know when not to trade. Yeah, it is actually good to know when not to trade or lower your risk. Yeah, Mike. I hope if you guys don't get anything, like if I was to tell you guys ignore everything, right? In terms of what you think is important. If all you walked away from this channel with was knowing when to trade, when not to trade at a high level, I mean, that is invaluable. Okay, you know how much money that would save you? How much heartbreak? How much headache and depression that could save you? How much feeling like a failure that could save you? I mean, it's just insane. That alone, knowing when not to trade and when it's good to trade and when to lower your risk, nobody knows that. Even these people that are super big on social media, they don't ever tell you, oh, it's a time to lower your risk. There's a handful of them that don't trade ICT that I watch or just am interested in hearing their opinion psychologically because they're good traders. But most people, you can't pull out that piece of information. They just want you to take their trades. So you get addicted like a drug addict thinking that they're the drug dealer. The drug of choice is the trade, the signal. That's pretty much what people are selling people when they're taking signals. It releases the same stuff that drugs do, dopamine. So hopefully your dopamine comes from, or from this channel, comes from me teaching you new things that helps you be confident. And the dopamine comes from your feeling of confidence and clarity. That's a healthy relationship, okay? And that's the type of thing I'm trying to cultivate with you guys. And for a lot of you, pretty much all of you that hop on a regular basis, I feel like that's what I've been able to accomplish. And I'm grateful for that because you're seeing results. And I feel good that, you're starting to grow, because that's my goal. I don't just sit here to hear myself talk. I don't even rewatch any of my live streams. I don't rewatch them ever. I could care less to hear myself talk. I hear myself all the time, right? Like in my head, and I do enough talking to myself, So, but you guys, I encourage you to rewatch stuff that may not make sense, that makes sense, that we talk about. So and continue to show up because it's invaluable, the stuff that we talk about. But yeah, I'm really glad that you said that, Mike. Obviously, it spun me into something that I'm really passionate about, which is that topic. But yeah, I'm glad to see you say that. And Fritz said, very convincing bearish potential shift of narrative. That's what you probably should say. From the run higher to bearishness, in anticipation for the interest rates, in anticipation for watching how the Power 3 is going to unfold, what the dynamics are going to be for the monthly, weekly, and the next daily Power 3, how all that stuff is going to unfold. But yeah, it's very, very convincing that us moving from the higher time frame to this daily chart, we still now need 3 PD arrays to be violated because we're ahead of such an important news event, that being the rate cuts, and the fact that we're back inside the range. We're in a time where price is telling us in its own words or own actions, like, hey, it's time to cut your risk. Okay, wait a minute. Okay, let me make a decision, right? Let me really prove it to you. And the things that we've outlined is what's going to get us to that assumption. Like, it's proving it to us, right? And for shorts, I know I talked about this low, but I could say that if we break down below this low, we'll have an inversion here, overlapping inversion. That also would have to, basically, if we get down there, it would have to be supporting this daily fair value gap, the bearish breaker in here, the order block, and breaking down below the swing low, which the wick here can also act as a resistance. And then we also have a new wick opening gap. So all those levels would potentially end up being individual arguments for us to support a narrative changing short term to then get down to the sell side over here, maybe to here. If it gets down beyond this, it'll probably target this. If it happens ahead of the rate cuts, and then once we get down into here, we'll have to see what happens if this unfolds. And again, all of this gets turned off in terms of our interest to go lower in any way if we displace above the mid portion of this and get outside this daily fair value gap. Because then that would invert it. That would turn this to a BPR. That would turn this to an invalidated order block. And if we were to take this low out and then get above this high, that turns into a bullish breaker. And then potentially a bullish order block too. Continuing the move higher. Right? So these are just some of the scenarios. These are some of the critical, important levels. Some things that I'll be thinking about. And, again, I hope that you guys have gotten a tremendous amount of value from the time that you spent with me. I'm grateful for the attention you guys give me. You could be anywhere else watching someone else that maybe has a bigger following, that's more entertaining, that's more this or more that. But I can tell you one thing, most of these people can't out-trade us. And I prove that statement every single week. It's in a competition, and I don't think I'm better than anybody else, but these people got egos that piss me off sometimes, and they hurt so many people. I have students that come to me on a daily basis telling me their horror stories, and I try my best to give you guys as much value. And so again, you guys are much more appreciated than you understand, and hopefully the quality of teaching I give you guys and the results you get is enough of a thank you for your support in that regard, right? So, thanks again for always supporting the channel. Don't forget to like the video, subscribe to the channel if you haven't already. Spread the word if you like the vibe here and you think someone else that you know that trades can get some value from being with us. That'd be much appreciated. You'd be obviously helping someone else and helping the channel grow, and just basically supporting what it is that I do here. Because I put a lot of effort into it. Especially into those of you that ask me questions on the side. So hopefully everything was clear. If you guys got questions, please let me know through either DM in the free Discord, or if you're in my private group, you already know the vibes. Just let me know. If you guys need a one-on-one in my private group today, I'm available after the call. Just let me know, and we can hop on and do whatever you guys feel we need to do. With that being said, God bless you guys. Thanks as always. If you have any questions, let me know. Don't do anything stupid today. It's Sunday, all right? Rest, relax, ponder some of the things that we've talked about, and try to game plan what you want to see tomorrow or next week look like, right? And if you had issues you had last week, reflect on it right now and decide that you will not make those mistakes. Try to paint some new rules that could prevent you, and acknowledge the mistakes that you made, but also congratulate yourself for the successes you had. Go into this week with a positive mindset. I try to set the stage, set the tone for the week on these calls, and hopefully I do a good job of that, right? So hopefully it has a positive impact, right? So, again, with that being said, God bless you guys. Thank you as always for the support. Let me know if you guys have any questions. We'll be live again on Tuesday for our live call of the week. And then in my private group, as you guys know, we're live every single day, 6 days a week. So I'll see you guys soon in my private group, maybe today. And you guys here on YouTube, I'll see you all on Tuesday. All right, have a wonderful rest of your weekend. Oh, and for those in the U.S., happy Labor Day.